Hey, good morning. Whew. All right, throwing this together a little bit quickly. Let's make sure I've got closed captioning on. Good morning. James needs an access code for Zoom. Hold on one second. All right, good morning. So Russia has invaded Ukraine, according to most media outlets, except for China. That's another story, and we're not here to talk about geopolitics specifically. We are here to talk about volatility and how it reprices everything. So let me just make sure James is all set up. We basically, this morning, big picture, I was missing my daughter last night. She turned 25. She's at a tavern in Greece. We're talking on the phone. I come home, I make a bonfire, have a few shots of tequila. I'm not expecting to wake up this morning to Ukraine invasion, but here we are. And I thought it would be a really good idea to open up the trading room. I am very, very happy that I've got some fabulous traders and contributors who can help you as well. So if you have questions for me, definitely hit me up in Zoom Q&A. They will populate in Zoom chat. So Rithika, market moving news and what is moving. Archna, advanced options. These are all traders on my trading desk. We support our Discord product, our Fishing Club product, Craig and Aisha in the Edge product, which is more macro. It's very much geared toward institutional and macro. So that's really the conversation in that particular channel in Slack. I've opened up Zoom for my live trading room sessions today, but unfortunately we couldn't configure Slack to get folks onboarded. It needs custom programming. Anyway, Zeke and James talked about it this morning. That's my programmer and my director of marketing, and we're not able to pull that off, but I will be showing you some charts in there. Okay, great. And closed captioning is on. Thank you, Archna. So Tiffany is also doing her best to capture some of these market themes and trade ideas in Zoom chat. It is being recorded. It has closed captioning. And basically, I'm going to do the best I can to kind of navigate the markets. So first and foremost, I have been someone who is very, very risk off and helping the clients position defensively since November. And I want to show you some kind of funky charts that help me identify that. I do list my market thoughts. I was hoping very much that you would have full access to Slack so you could come in here and check it all out. But unfortunately, we didn't figure out how to do that for folks this morning. So I'll be showing you some things. But big picture, one of the reasons I have been very much growth to value and risk off has been my intermarket tells. And one of my tells has been volatility, my stock bond volatility ratio. So I post this for clients regularly, and I want to kind of like big picture show that to you because I think it has been a fabulous kind of supporting confirmation of why I have stayed so bearish. So I'm not organized this morning. I'm telling you right now, I'm just going to kind of show some things of why I think we've got, why the market wasn't safe, how we got here and how I could see it in the charts. And then we'll try and navigate the market open once we get there. Let me just make sure James is all set. Okay, all right, so again, ladies, we've got Suda for futures, Archna, advanced options, Tiffany with Gamma Flow, Rithika with Elliott Wave. All four are in Zoom chat, as well as Craig for macro. Hit them up if you have any questions. I am happy to answer questions in Zoom Q&A. Good morning, good morning, good morning. Okay, so there's some charts I'm going to show you before market opens. I think that will be probably more helpful. I update this kind of chart regularly and post it for clients. And it's basically the sector rotation from growth to value. Semis, by the way, still not even close to oversold. Lots of the IPO trades, we know about that, topped in January. I love weekly gap downs. So that's why I was able to really press the China shorts, FXI and KWeb. And if you follow me on Twitter, you also know I am an adamant short maker. I just felt very firmly that we were not done going down in emerging markets, whether it be EM, FXI, KWeb, EWJ, EWG, Germany, Japan, etc. So in addition to these tech rotations, basically out of the exponential growth, high valuation, high PE growth plays. So under the surface, there's been lots and lots of chasing short, but I just wanted to kind of show you that this is not even close to being oversold. So all this talk about folks saying, you know, we're oversold. I have been adamant that we're not. This is NYSC. This is something else I really like to track, cumulative, NYAD cumulative on a daily and a weekly, kind of rolling over this mountain back in October of 2018, again for the COVID. And then here we are, lots and lots of distribution sold to you for a solid year, and then weakness under the surface. So these have been, you know, kind of fabulous tells. This is from 2009, same thing, cumulative advanced decline, all the way up, and now we're breaking through that channel. So I do still see 4,000 for SPX. That's pretty general, I know, but it's just an absolute magnet from this trend trading perspective. And I'll show you that volatility chart as I kind of work my way up to it. Basically, I'm trying to kind of figure out which and will be the most important. That's my gold stuff. Breadth has been an absolute mess. So I continue to update breadth over and over again. I don't care if it is the S&P 500% of stocks above the 200-day moving average falling, and that was my trigger. We needed to get below 65, and we did, and we continue to fall. And folks say, oh, we're oversold. No, we're not. There's lots of meat on the bone. Okay, so, and I also have some funky indicators that I use. All right, so let's clear that. Sorry, that's James. That kind of show the continuing decay, whether it be my McClellan summation index, which on a weekly, by the way, you can tell that this is very good timing. This just shows back to 2013 of when we start to get weakness underneath the surface. And we cannot have a continued trend or have a chance of getting back to all-time highs if we have this breadth destruction under the surface. So I've been a very big bear, let's just put it that way, since November. And I'll share some of that with you. Some of this stuff is going to be a little funky, but nonetheless, 3 months ago, this particular chart of cumulative volume showed absolutely rolling over in a Morningstar reversal. I'll update that for you today. But this is when I started to get very nervous, was basically around the 9th of November. It triggered on the 16th, and I had alerted clients on the 19th that we were in trouble. So I'm, like I said, there's a lot of geeky stuff in here in the intermarket rain, but it works. That's all I can say about that. So even just a few days ago, showing when people were so excited to buy the dip. I'm like, no, we're still so weak under the surface. This is McClellan summation for SPX. This is also for NDX. So I update my intermarket tells, and I've got some kind of weird ones, but this all, it told me I have no buy signals. I know when there's a buy signal, and we don't have one. It's just not safe. So over and over again, I kept kind of reiterating that we do not have a situation for a buy, a swing long buy. So I can chase stuff and help clients position, you know, for the intraday or several day chases. And right now we got a market mayhem, so we got to navigate. But big picture, my goal is to tell clients when I think it's safe, and it has not been safe. So all of my intermarket tells have said, no. The last time we had a really strong trigger was back in October, and it was October 9th, and then again on the 15th. And I said we would have a 200-point rally, and we did. So when things align really well, it's a full-on like counting cards situation. We definitely have not a situation for a bullish impulse. But the big tell for me, believe it or not, is this very funky looking little stock bond volatility ratio. Okay. Again, I'm showing you the geeky stuff to get it out of the way, to kind of explain my thinking as I'm coming in here. Oh, you're okay. Russia has followed through. Volatility was already signaling it was going to do so. So this is definitely my risk off tell. I know this is not going to help a lot of people because it looks like a lot of squiggly lines, but just I've used this with extremely high accuracy over the years to time when volatility was coming in, and also a good time to short it. So this was forming a head and shoulder, very tight, compressed head and shoulder. This is a stock bond ratio. Volatility is overlaid here. Once we trigger above zero, it is very big risk off, right? We have obviously this morning, you're going to see VIX very firmly higher, right? So this was already intonating that we were moving higher. In addition to just plain old fashioned technical analysis of VIX. Who says you can't do technical analysis of VIX? I do it all day long. So this is the 10-week moving average. Volatility obviously exploded back here mid-February, came right back down, but it closed above the 10, closed above the 10, closed above the 10. This is bullish. We still needed to get and clear above 331. This is monthly resistance in order to really have sustainable volatility. We have obviously this morning, and be careful pressing, short this morning. It was a time to position into weakness, not necessarily add to it today. Anyway, the baseline bet was that we were going to populate higher in VIX, and we have. So I have this updated tell. Let me just show you here. Editor. There we go. All right. So this is another thing that I'm watching like a hawk. Yesterday we dipped below. This is backwardation using VIX in the 3-month. We basically and I've been waiting for this to happen, right? This is the trigger, zero. Now the question is, are we going to have a little blip, which is garden variety pullback, or are we going to have crisis? In other words, big correction. So instead of a 10% drawdown, which we've had, we're going to have a 20% drawdown. So this is also VIX kind of charted. You can see that it's higher highs, we were going lower, obviously, but these spikes were lower highs. Then they started to reverse, and we're getting higher highs. And obviously we're going to push through that 35. All right, Archna, hold off. So to me, backwardation is a big portfolio risk off, right? We've already had re-rating of stocks. We've already had deleveraging and de-risking by hedge funds under the surface for a solid year. But this is a very different flavor, right? So this is a COVID backwardation. This is the 2008 October to December, right? When rates, the 10-year reached 3.2%, and we pulled back 20% into the Christmas Eve massacre when Manchin called the banks, right? So that's a big deal. A lot of these other ones are quote unquote garden variety. So we have triggered yesterday, the rollovers in play. This is updated. Obviously, we're going to have very different dynamics coming into play, like gold. Gold had already triggered. We were already positioned long for gold, short in the indices, and then tons of those, swing trades, if you will, in the tech, Nasdaq tech plays. But the point is, breadth was always the tell, always the tell, and it still is. So let me kind of go back over here to the point of sector rotations. So I think this is really important. We have a whole bunch, and I wish I could get you access to this because it would give you exact levels. And I think after the market opens, we kind of see where we settle down. We can go back and I can bring up these particular charts, but I was very bearish actually early on when I posted on Monday, January 3rd, bunch of plays just aren't behaving as safe tech trend plays. And I think we have a lot more pain to come. So I positioned with all of this analysis in these, mid-cap tech plays. It still had tons and tons of room to fall, and they all fell. That January through now has been just a bloodletting for mid-cap tech, no question about it. So I have updated those in different channels. I've got Chase is short duration crypto, obviously Bitcoin and Ethereum in particular. Sector rotations was for me moving out of the mid cap tech, and then recently out of the mega cap tech. So these are all the price targets and the charts, big picture. It's been a kind of scary scene, whether it's a head and shoulder on a Google, and we shorted that post earnings. Here are the levels, and clients have this. So now we're going to be hitting some of these levels today, right? This is going to be a big deal in covering. NVIDIA has, I think, lots of room to go. So the point is Tesla, absolutely. All of these are tops as far as I'm concerned, distributed tops with lots of meat on the bone lower. New York FANG is a great tell. I'm actually waiting for this one. This one I just updated recently. So New York FANG is kind of an equal weighting of the 8 mega cap tech plays. And if we come down to a monthly support level, we should have a little bounce. That's usually a really good tell to cover some Q short because of the heavy weighting in Apple and Microsoft and Tesla and such in the Qs. So I'm going to be, a lot of my alerts are going to be going gangbusters, right? So we have to, as far as I'm concerned, let some things settle out. The spreads are going to be extremely wide. I know the clients are going to be covering some positions because they're going to be just whipping right down into price target. Some things I said yesterday in regards to Russia potential was I do not think it is advised, even though we have, for example, RSX has come all the way back down to this Pfizer vaccine breakout, right? In the first of the year, all gains have been removed. I said, I don't think it's a good idea to sell puts on this. And that was a suggestion that was basically coming in. I said, I don't trust it. I would like to wait for the falling knife to settle and base and move higher. Same thing in that article that I did a month ago, right? The January 24 lows are not in. We're going to revisit and take them out. Let the market, make your base before going in and trying to buy. It's not safe swing long. So Russia is down, obviously. I think their stock market was like 45%. The RSX is a good 22%. There's going to be some reflexive bounces, massive ones. So if you have questions and you want me to take a look at the chart, let me know in Zoom Q&A. Okay, that's definitely what I would suggest. So how did I know 200 points? We have 10 minutes. Hold on. Like counting cards, just to answer that question. Hold on, let me show you this. Okay, so this example, okay, I have a lot that has to line up, but I got to do this another time when it was not pre-market. But the basic premise was when we have a crossover from oversold up through, whether it be an oscillator, whether it be, this is stochastics, whether it be MACD, basically they all align. And I actually was on CNBC when I made that claim. So I remember doing this live and telling clients, if we can close above X number, we're going to rise 200 points. So a lot of it is using my intermarket analysis with technical analysis, honestly, and the mood of the market. Like the mood of the market of late has been, earnings have been fine, but we're going to pummel them anyway, right? So yesterday we did a little, Amazon of Brazil is not doing so well this morning, but it still isn't even down to price target, which is 756. So I still think there's meat on the bone for, and they already did earnings yesterday, right? And they sold off again with the market, but this is still a short, into some prior monthly support. But the point is, I am still a big bear. I have been in FXI with a huge gap down, KWeb with a huge gap down on a weekly, and they're coming into some price targets now where I think it's actually going to be a good place to cover. So let this 34, for example, in FXI, kind of take out this monthly support. For example, let me show you. Okay, that's monthly support in FXI. We've tagged before, ricocheted higher, right? Reflexive bounce, it's been support. Let's see how this support does. I think we're obviously going to overshoot it, but if we can get back above, then that's the go long for the FXI. And I just put this on a monthly to kind of show you, but the point is It was not safe and has not been safe. And folks have been wanting to come in and buy this, and it's been absolutely garbage to me. There's been no bottom. BABA right now is about 100. I'm expecting about 100. So we're almost there. Like, we're going to be into some areas where I think we have some profit taking and some positioning, but I wouldn't recommend the knee-jerk reaction. I'd let the market kind of show us what it has in mind at the open. Some things that have been very productive long, DBA, for example, boring trend trade, doing great, because Russia has such a large percentage of its exports in raw materials, palladium, platinum, wheat. I think wheat's only 5%, but still we're really spiking higher on a lot of these plays. LNG has also been a trend play. Again, the things over paper mantra that I've been talking about, it's still in high pursuit. Gold, let's go look at gold real quick. Gold is spiking higher. This is a stuff, where the heck is this? Please. All right, so gold is basically that trade of, we have finally pushed higher, not just the 174, which was GLD resistance it needed to get through, but also this bullish percent index. It's also an Armageddon trade, no question about it. So it was kind of the perfect storm of, it was breaking out on an intermarket analysis. It was also breaking out relative to SPY, right? That's a big deal to get back above. This is gold to SPX. Long story short, I use a lot of intermarket analysis to define my trades over macro. I use macro as a backdrop. So this morning, gold, for example, is spiking higher. Let's get on my price chart to exactly 183.53. There should be a little bit of digestion here. In other words, a lot of this stuff has already reached price targets. Let's go to the major ones, right? So Qs, I mentioned yesterday, again, in my continued short thesis, that we break 338, next level, honestly, is all the way back down for an overshoot to 303.50, but here's support at 315. So that was what I gave for levels this morning, and I wouldn't be surprised if we get some solid profit taking right here at 315. In time, we'll see what happens, but I think we're going to have some solid profit taking. So Alibaba, yeah, I still have, ARK has been 60. Yeah, so 60 has been price target for ARK for a while, and there isn't a lot of support, by the way, between 60 and 33. So unfortunately, what's been happening is these just keep getting cut in half. They've just taken a little while, and I like it when they take a while. The slow move is the easiest to trade. You just have to add time on your options. If puts are getting expensive, do a put spread. But basically, this is now kind of overshot that $60 level. There are still plays with lots of meat on the bone. Watch Disney. I mean, Disney has, as far as I'm concerned, 126 handle on it. So had earnings, digested, could not get back above the 100-day. 155, 156 was the stop for a rollover, and now it's level by level by level. And I think within the next month, we'll head back down to 126. That would be gap fill from pre-COVID. There's so much meat on the bone, I can't even tell you. But I think the reflexive bounce will be very strong, and then it will be sold into. Thank you, Tim. Appreciate it. All right. So what questions? Hit me up. And LNG, Craig is also letting me know that LNG raised guidance. This is nat gas. It's very few ways to actually play the nat gas spikes that are going on in Europe. So LNG is one way. We're going to have some geopolitical impact here on, I'm surprised MP isn't higher. Yes, I still think that 2018, let's do, hold on, let me just get this here. So let's go over here. So I had put yesterday, Microsoft, it's already, the overshoot this morning is pretty strong. Amazon on the way to 2880, Apple, very, very nice. I like this 157, it's already there. Tesla already hit the 760. but I had mentioned that I still see Kathy Wood forced to sell her winners to pay for her losers. We already saw Palantir sell off 30 million shares by ARK Fund in 3 days. And I said, Tesla's next. So Tesla's in distribution even before Ukraine, it was absolutely a short. It's been posted for weeks. Actually, I think probably months at this point. Anyway, NVIDIA on its way to 2878. Rithika posts in my Chase channel for me. So when she's taking pictures and obviously updating these levels. We had a few, that do, go long, like the BTU. That was an example where it's actually a trend trade. You can see the scoop pattern on a weekly. By the way, that's a weekly, that's a day, and that's an hour. You can also see this as a swing trade. When we broke above the 200, the Bollinger Band's expanding. It comes back and forms a flag. And then also recommended as a chase yesterday because it was starting to break out. So this is how I look at the market. All asset classes, risk, are we risk on or risk off? Breadth, we got to do the breadth indicators and why I was so convinced we were going to tank. And then of course on multiple time frames. So I use a few risk indicators that for others will be absolutely confusing, but this is cumulative 4-week new high, new low. And I hope you can see on a weekly, this is fashioning itself into a left shoulder, a head, and a right shoulder with a lot of weakness. And once it breaks the 50-week, it is no bueno. First time, it always bounces. Second time, see the Bollinger Band expanding out? We still have room to go. Lots of room to go. Anyway, yesterday, and I know this is very noisy, but trust me on this. Anyone who's a client can attest these work like gold. So this looked like it was absolutely going to roll over, and it did in a huge way. Another one that I use, which advanced decline to a minor extent, it's kind of more of an intraday tell. It also broke. Yesterday, I said it was going to go green to red. We opened up 0.15 green. We closed down 0.25. They already smelled it, right? Big picture, distribution, sold to you. My favorite is cumulative volume. This is the one I just showed where I posted 3 months ago. We were in trouble. We had a trend reversal signal on the weekly. It's called a Morningstar reversal. So anything below this meant distribution was going to be in full effect. That was back in November. So I've been warning clients since November. Then we had a massive expansion down, bounce at the 50 and then down. This has been rolling over. So let's see how we do. Market right now for volume is weak as expected, tanked in advanced decline. Now we're getting into some oversold levels. By the way, we still have lots of room to go. Yeah, that is unprecedented. So we have some massive failure here in breadth. We will absolutely, and we tagged perfectly. I would not be surprised if we get some profit taking in gold right here. Silver, the same thing, 23.42. That actually has room to go. All right, TLT. This was a bounce candidate. So I'm a big, big, big bond bear, but this did a perfect job of bouncing at 136. And I said we could get up to 140. Yields. We are now below the one. And I wrote yesterday to clients, said live to clients, I believe we're going to head back down to 1.8. Okay. So this is 1.8 and then we'll see. And we did it. We're underneath definitively. That's obviously screeching higher. I think 140.82, maybe 141. All right, so the big tell yesterday that I had for clients was this in regards to VIX and Apple, very important. So when Apple drops, VIX goes up. It's binary, swear to God. But more importantly, and this is, ooh, where's my data? Come on, there we go. Apple just dumped into the 200-day practically. We're almost there, right? So this is a big trend line. Another reason why I was adamant that this was going to be breaking down. This is, you can see on a weekly or a monthly, that trend line. Okay, we're already positioned short. We opened below 165.30. So this is the 10-week, very important. We opened below that. That's not done going down. Absolutely, for me, this is 150 to 145 still. We took out the January 24th lows. Okay, We definitely have trend reversal written all over this thing, but level by level, Apple is still trying to hold up the market. Fascinating. There's your head and shoulders for Microsoft. Actually still doing pretty darn well. Look at that. So I said 278 for overshoot. Obviously wasn't known what Ukraine was going to do, but we have it right there. Let's see if we have a little intraday move back up to that 278. Wouldn't surprise me. January lows. All right, so where are we in FANG? There we go. All right, so we should have a reflexive bounce in the Qs, but I do not believe this market is done going down. So this is definitely the monthly support I was just pointing to in the sector rotation as a place for the market, for the FANG stocks anyway, to get a little bit of support. Anyway, VIX, let's go there. VIX is nowhere near as elevated as I think it will be. Look at the stochastics alone, plus the stock bond volatility ratio that I showed you. On every single time frame, this is bullish. Every single time frame, this is bullish. Will we have that dance of they're going to, you know, sell VIX and reflexively buy the FANG? Sure. But big picture, this is still bullish. And I mentioned when SPX has an intraday range of about, hi, James, I can see you.
Sorry.
That's my marketing director. Hi, happy birthday too. It's soon, right? All right, so we're sitting right here on 412197, which is an SPX target for some bounce activity, and then obviously a break. When that happens, I don't think it's going to be right here, right now. We're going to head down to that 4,000. So they're trying to hang on. All right, so we have basically a market that has been shell-shocked just as much as Ukraine with no worries, don't even worry about it. All right, yeah, I had all kinds of stuff triggering too. I just want to check that out. Okay, so what did I give yesterday for price targets? Swear to God. Oh my God, 718.72. John L., how's that? I know, right? Okay, so I am expecting a bounce here, and we talked about that. So we've got FANG on New York FANG on support. Okay, I got to go to a different time frame. So a bounce, by the way, just means a channel. It just means a reflexive bounce into resistance, and then we can short it again. But for right now, FANG is on a monthly support. By the way, all time frames are still bearish, but a monthly support. We literally tagged perfectly also that 700, literally exactly 700 as a low. That's monthly support with a little added kicker that this is quarterly. Okay, it's a big old channel. So this has been playing out really well. What else? Yeah, I haven't even looked at Russia because I don't, yeah, reflexive bounce, 22%. That's just insane. But why I said don't sell puts on this one yet. It's just not worth it. It's just not worth the risk. 100% not worth the risk. All right, we got some solid price targets hitting. By the way, it's a gap down in FXY. We started with a gap down. So we had capitulation buying. I am waiting to see, and it's early if this is capitulation selling. We need a weekly bar that is just a puke fest. And that's what it looks like right there. All right, so let's figure this out here. VIX is bullish on all time frames. We've absolutely reached some price targets, both intraday and weekly. Small caps are absolutely not done going down either. That was a gorgeous bounce into resistance. By the way, I use the 10-week like religiously. All right, so we still have room for sure on the downside. Diamonds. Nope, not done. Q's bouncing perfectly at the 100, still not done, but that was a really nice tag of that 315. Can't see it, but it's pre-market. All right, gold, yep, exactly. So profit taking in that 183.5 area on Q. TLT, I do not think is done. I think it will tag this 141 area. NVIDIA bouncing exactly in channel support. Look at that. There's a January 24th low. That was price target I gave yesterday. We've hit and we're trying like mad. But look at that. That's weekly resistance. That's resistance. I don't know how else to put that. Yeah, Brian, the BABA. That's also 2-bar reversal. BABA hit 100. It's tough for me. I still see this one lower. I know it. But it's trying like mad to get back above the 110, get back into 110, and it's got yeah, a lot of folks are profit taking right now. Roku's already green. All right, so we're definitely having that reflexive bounce on Q, bouncing into resistance, whether it be NVIDIA or what have you. And that's pretty typical. Let's see what the first 15 minutes. I need 15 minutes for my intermarket to really kick in, give me a nice bar. That hasn't gone very far. Nope. Yeah, no, unfortunately, we're still selling under the surface. Yep. There's still more net sellers than buyers. Some stuff is very oversold. This is true. This is, bouncing exactly on support. I get it, but I don't trust it. Let's see what we have here for some of the. Pfizer's not quite at price target yet. It's hard to know which one's disappointed for earnings and which ones are just being sold off indiscriminately. All right, so ARC has been a fabulous short and then another fabulous short. So here's the wedge breakdown into resistance, rolls over. It's at 60, which is price target. I'm not surprised that we're having some profit taking and covering here. I mean, that has been really, really an eventful evening. We got an epic squeeze right here that's going on in some of these plays. Like NVIDIA, right back into resistance. Exactly. Google's already green. All right, so oil hit 105. Nat gas obviously soared. Let's go take a look. I haven't even. Yeah, that was already in play. And look at XLE sell off. This is a really interesting one for me because I happen to think this is going to be rolling over. And I want to show you some intermarket that kind of explains that. But I've been on this bent that TNX would pull back short term, okay? That we hit a kind of 2-bar reversal and that we would come back inside, remember? And we would have rolled back over to 1.8. And by the way, I am a huge bond bear, but every time you look at this, you got to dance on different time frames. So short term, I was expecting this to come back in below 1.94. Okay, and it has. With that, I expect oil to soften. The oil and gas plays plus market weakness. So this is resistance, the 70 area. We need to come down, and now we need to break. Here's Exxon. Sorry. We're at 76. It's going to be tough, but we come back down. That'll be another sign. What was that? Okay, cool. All right, so these are still shorts. So I still have energy as they were hiding out in energy. We're going to soften. We definitely going to have some fabulous intermarket tonight. Hold on, let me just check something real quick. And then I'll go through Q&A. I want to just look and see if I can get anything from my intermarket right now, even though a lot of it is end of day. All right, we hit. Yeah, that's still resistance, right? Above is bearish the market, below is bullish the market. Gold hit resistance, came right back down on Q. I still think TLT will do a little job of stabilizing there. High yield, not so much. We have a that's not even done. That's just sitting out there. Nope, it's still bearish on a swing setup for sure. All right, uranium is taking off. Let's go over some of these ETFs now that we got 15 minutes in and we got our reflexive bounce in play. Tesla right back up. That's quarterly support. That is a channel. All right, let's see if we can get some follow through here on. Wow, that was impressive. All right, so I had a whole bunch of stuff that just basically triggered. So 412948, which is on a weekly, we need that. Basically, we're bouncing there. That's obvious. But my point is, on any time frame, you can kind of see we're having a little bit of a reversal higher. But big picture, that is busted, right? So it's a reflexive bounce back inside the Bollinger and the Kellner channel, for example, but it's still busted. Yeah, these continue lower. These are still in play to my 82 PayPal. Just keep in mind that square reports, and that can still cause some gyrations, but obviously I'm still bearish PayPal to 82. I'm just looking at my intermarket real quick to see if there's anything noteworthy besides the fact that we have broken definitively, and I don't see anything right now that says we're done going down in NYSE, except this little tag. If we could tag that, that would be a nice little break. All right, so we're right back in the fold here. Okay, that's monthly support in FANG, which helps me basically navigate whether to press short, right? The FANG short trade, and it does not. It says we're bouncing. We're bouncing. We go up, take the time. I'll set up. Once we get back up into resistance, we reshort. But for right now, that's pretty clear. We're having that. Now let's go see what breadth is looking like at the 15-minute mark. All right, so here's our head and shoulders and breadth as well, which helped time this SPY drop. And by the way, we're not done going down. I don't know how to say that enough. This market is absolutely broken, and it has been for 3 months. Actually, distribution took place from February of last year, but it topped out in June and then it rolled over in November. We're still not done going down. Ukraine aside, it started long before Ukraine. Anyway, we're not done yet. Okay, so whatever bounce we get is still short the rip. Oh, yeah, remember how that went sideways for 3.5 weeks? There's we're not even done. And regular clients know these charts, so I have to go over these because this is what, is really making hay while the sun shines, right? Why be short? Why? Because breadth is in distribution mode and it has not bottomed yet, period, end of point. I don't care that Roku's green. It was already exceedingly sold off. Big picture, that is a very, very, very nice trend line tag. That's it. Doesn't mean I trust it. Not even a little. All right, so things over paper. CCJ spiking, lithium not so much. Gold definitely selling off at resistance. TLT is still firm. SPX is having a bounce. Hold on, let me get my, oh, there it is. Okay. There we go. Pretty pathetic excuse for one, though. Yeah, an XLF reached price target. This is tough, okay? So XLF, although it's lots of large cap value has been my theme and value over growth, the fact of the matter is that this looked like it was going to absolutely roll back over and tag the 50, which it has, okay? Broke through the 200 again, but that was price target. 36.61 is actually still in play. You already know this was bounce area, so hopefully you're, where the heck is that? Oh yeah, here. All right, so 718.72 bounce area. How much? 760. So yesterday, 760 was price target. Really, really, really nice. Okay, and then I was asked where to next. 718.72. That should be a bounce, and we are bouncing. It's just all there is until we get to resistance, and then we can reshort. Still not done. And here's a little bit of that intermarket that I just showed you earlier. So this is backwardation. When it gets below zero, it's a negative number basically. Now we got to see, obviously, this gap down, very dangerous looking, but VIX hit resistance on so many levels. So not able to show you the end of day stuff. It just doesn't work. Yeah, it's still not done. VIX is still not done going up. I mean, this is just to kind of give you a flavor of what I'm looking at. For example, this is on a weekly NYSE. We got all kinds of room to come back down. Okay, MACD has rolled over a long, long, long time ago. This is what it looks like under the surface. Okay, on a weekly, it's kind of closer. So an NYSE tell is very important, or Wilshire 5000, because it's, everybody, but I like the NYSE as for charting purposes. Reflexive bounce is one thing, but the trend is broken. That's very, very clear. All right. So nothing there that is anything new. VIX is still bullish, and that's all there is to say about that. XLE is the nicest short still. I really think this is XOM, whatever. They're heavily weighted. So the point is, as long as this 10-year heads below 1.94, on its way to 1.8, XLE, XOM, the oil and gas sector, which has been a fabulous trend play, is in profit-taking mode. So that's, if you're still looking for something that is meat on the bone, short, with quote unquote inexpensive puts relative to some of the others, big tech and XLE. All right, so we have your Palo Alto. They had a good report, Archana. Yep, they had a good report. They're popping up strongly. The other one, what was the other one yesterday? I cannot remember it. And OLED, thank you very much. Beautiful. All right, but stuff that is still has meat on the bone, short, not done. Carvana, that kind of stuff, for sure. In the same way that AFRM made it all the way back, fabulous short, it even took it out. Carvana's not even back yet. So there's definitely room. All right, so back to NVIDIA, we went right back from this 208 price target all the way back up to this 218, trying to fill the gap now. Look at that. Gorgeous support, gorgeous support. Yeah, W, you're asking about that one. That has been a long held swing short. Just no, this W, Coop, complete all the way back. Carvana, yeah, there's some things in swing land that I still think there's lots of meat on the bone. I didn't get to post yesterday, but in swing Slack, yeah. Bill, let's go over that real quick. A few more. They're not so friendly for options though, so. Hold on, let me get my, there it is. Two things I want to show you. Another reason why I'm short the XLE. Now, I have been an oil bull as an inflation hedge. You know that, March of last year. But XLE is a little bit different, right? Relative to SPY and all of the oil and gas sector has been a place for hiding out and absolutely a profit gold mine. This is XLE relative to SPY. We have come all the way back up. And obviously that's resistance of sort. I expect a pullback, but wouldn't be surprised if we get supported and then move higher later. But for right now, that's definitely resistance. Lots and lots of money has been hanging out, holding out in XLE. So that rollover to me is profit taking, it's protection. But this is really well timed. Okay. And my major concern still with my stock bond volatility ratio, which I took yesterday, okay, after market close, is this level right here is really key. So the last time that we broke the 200-day was COVID. We have been basing in this stock bond volatility ratio below the 200 for 2 years. And by the way, on the anniversary of the gap down, February 24th, it was Sunday. Remember that we gapped down 2.5% in February 2020 and then proceeded to drop 30% more over the next month. We have not been above the 200-day since March 10th. So this is a very big level for me, very, very big level for me. So it really depends on what time frame you're talking about in regards to VIX and SPY. This is a reflexive bounce. It's so easy to see. Oversold intraday, but big picture, the market is not done going down. That's my opinion. These are short-term rates, 13-week. Went parabolic, tagged perfectly, literally perfectly at monthly, 0.42 from 0.65 breakout, and has come back down. Going to settle here about 2.6. So very big move as they re-rate the Fed hike potential down to 16%. It had been like 66%, now it's 16%. All right, so lots of oversold squeezes here. So price target on Apple for the bounce. Yeah, you can see it intraday about 157. Let me manage a few things here. Export ban potential, Robert still says. All right, so what's going on over here? This is basically, just kind of show you a little bit here. We have a few contributors that post their analysis, all right? So Bob McMinn is a 35-year oil trader. All he trades is oil. That's it. That's his only focus in life, other than his son's hockey. The point is, this is definitely his domain, and he's been watching for intervention, right? Oil export ban, strategic petroleum reserve, tapping into that, and then its impact, obviously, on price. And Craig is macro advisor, very much focused on what's going on politically and how to trade it. In other words, positioning with Nasdaq shorts and gold long, and also LNG because of exporting nat gas to Europe, also spreads right in the credit market and what's going on there for risk. Basically, he's been really, really good on the macro trades for not only escalation of Russia into Ukraine, but also general market risk and credit. So this is where he posts basically those particular setups, and Suda is futures, everything to do with gold, commodities, as well as futures, and the levels very much focused on what I don't cover, which is options on equities is my flavor. And I wanted to have a dedicated futures trader, a dedicated macro advisor, a dedicated oil and gas trader. Rithika and Archana are more focused on momentum, very, very much focused on the momentum chases, I would say. And Archana using her advanced options, whether it be credit spreads, for example, selling puts into this market wash, the whole 9 yards, and teaching on that. So advanced options is Archana, and she is also available for questions. If you have anything you want to hit her up with in Zoom chat. Aish is more fundamentals. So when we're really looking at a longer term trend setup, right? DOMS is just what it says, weekly options, chases, and I am very much focused on all the rest. So chase, swing, and trend ideas, sector rotations, including posting all of this stuff. For me, I have been a very big bear also from this NASDAQ chart. We had a 2000 peak when you compare the ratio of the NASDAQ composite to SPX, And then beginning of the year, I saw this formation in head and shoulders and started to get very interested in positioning short, plus all my breadth indicators, etc. So for me, this is going to be a bounce to short into, okay? A very sizable bounce could come from this, but it's still going to be a bounce to short into. Does that make sense? This is on a monthly time frame. So I always go back, like grandparent, parent, child. I'm looking at what the big move is going to be. We're back in this channel. That's what it means to me. And so there's going to be a lot of opportunities on a short duration to chase, right? But big picture, I want to know what current I'm swimming in. And this is the current we're swimming in right now. Big picture, I also see growth to value. There's no question in my mind. We triggered last year. It was a fabulous rotation where basically the FANG stocks went sideways, and that gave the momentum for value, in particular energy. And nobody was expecting energy to leapfrog from last position in 2020 with tech outperforming to first position in 2021. But I was adamant we were going to have a rotation into value. Energy had been at multi-decade lows. We were rising up, obviously, in the market in general because of the COVID, the Pfizer vaccine announcement, and then the blue wave win. This was all back in 2020. And then basically energy outperformed by a nautical mile over tech in 2021. So this triggered again November 29th, which is basically that value rotation. We were going to have more selling in growth. And in particular, I said mega cap growth is now going to take it on the chin, not just the mid cap growth that had already been under the surface deteriorating, like the ARCs, right? And the biotech and the SPACs and the EV. So this is still in play. This is going to be a long year of underperformance for Nasdaq. That was my major call, and I'm still sticking with it. In the meantime, we're definitely going to have some energy, I think, profit taking. So that. I've also been a very big bear in the K-Web contingents, the China, FXI, all of that. Just saw that as a potential for more selling, and it has really worked out. So emerging markets, week, we're going to go over that right now. Gold, we got some profit taking, but that's still going to be some area of safety. Oh, the dollar. Let's go look at that. We haven't even done that yet. All right, so let's go over some key areas. Dollar yen carry trade is a little bullish this morning. And dollar, oh, we got a little support here. We have not tanked. I'm still expecting the dollar yuan to fail this level and roll down to about 6.28. Okay, we're not there yet. Yeah, perfect. All right, so I am also bearish the euro dollar carry trade and have been since 1.19. Okay, so this is a little bit funky, but I'm gonna show it to you anyway. Head and shoulders, euro dollar. I know there are lots of macro reasons to be short as well, but it was basically in this time frame right here. Okay, we could not get above 1.19. That was a swing short recommended. We literally broke back below this shoulder, and we have been doing a really good job of staying below. We also, this is the 10-week. Remember I told you I love the 10-week on a weekly. It keeps me in the trend. And right now that trend has continued down. It's been a protracted downtrend. I can show you in tons of tech stocks as well. Same exact thing. We'll go over that. Anyway, got rejected exactly here again, which was key, 1.16. And now we've been basing quite a long time. I got very nervous here. That was a large expansion candle. That was ECB announcement and the rest. So that was definitely a macro driven reversal trade, but it couldn't get back in trend. Long story short, it's still rolling over and there is a lot more risk to the downside. So I still see risk here in the euro dollar trade, which is dollar bullish for now. This is UUP, but we have resistance here. So if I show you on a bigger picture, I got to show you this because this is really important. Hold on. As we're getting a little softening here of this bounce. Here we go. This was something I posted back on February 10th. Market thoughts, very, very clear. I said, out of the pool. Just get the heck out. All right, so this was CPI, of course. It was very, very hot, again, before Ukraine. But this is the dollar chart that I'm talking about. If we're not there yet, okay? We're testing again. If we get above 97.5 in Dixie, we have a whole new regime of worry. Dollar is smoking hot and it's going to break things like a wrecking ball. Okay, so this is a little intermarket down here. And this is definitely pure price in the dollar on a weekly. We get above 97.50, we're in trouble. Right now, we're pushing right up against that in this mayhem this morning. So we need some follow through to be convincing. Otherwise, we're going to get rejected. And as Craig talks about in his articles, this is very emerging market dollar devaluating kind of reaction. We will have bigger picture. Right now, we have that spike of safety trade into the dollar, safety trade into bonds, safety trade into gold, the usual suspects, right? Dollar, bonds, and gold. Gold has some profit taking. It's extended. Bonds, honestly, I still think rates are going to stay supported, but we'll see what happens at 1.8 on the 10-year. And as far as the dollar is concerned, that is a lot of resistance right there, that 97.50. And I mean, on a weekly, it needs to stay above, not just tag and come back and get rejected, but we need to actually get and stay and close above 97.50. So just, you know, I'm using UUP because it's I can chart it very easily. No question, we have risk off. And you can see it in the dollar. You can see it in gold. You can see it in bonds. And you can see it in VIX. I still see a very bullish VIX on all time frames. We're not done. All right, let me go over some questions, some more questions. Okay, so yeah, let's go to, okay, cliff hanging by its fingernails, trying to get back up. Not done, not done, absolutely not done. All right. So breath is still terrible. Advanced decline, obviously, that's called cliff diving. And it has been so predictable. Every spike has gotten dropped. Spike, dropped, spike, drop, spike, drop. Now, obviously, it's cascading. Still weak under the surface. They're still selling. They're still nervous, even if it's on support. We're getting minuscule bounces in tech land, in the markets. It's absolutely not safe. So for me, I love when an oscillator, for example, this is stochastics, is on the ground. It just says, we're going to stay there for a while. It's not safe. We need to get and cross above. Okay, and then we can have a little bit of a bounce. This needs to stabilize and then cross above. During COVID, by the way, this stayed on the ground. You can't see it here as well. Let me just show you real quick. During COVID, this was a fabulous tell. Let's go over here. All right, do you see this right here? This is one of the ways that I was able to tell that we were going to crash on February 18th before the actual drop on February 24th. And talked about that in my room. Not only did we have a divergence, but when this rolled over, when this indicator rolled over and some others that I use, we stayed and oversold the entire month. Never, ever bounced. Everybody's like, oh, on March 10th, buy the dip, buy the dip. I said, nope. We're still not done going down. And we did not stop until we had Fed intervention. So it's very easy for me to tell tops. Bottoms are typically event driven. They're tougher for me to time. I'll be straight out. All right, so let's go over and see what we got here for questions. All right, so James, you asked about Tesla, oops, and John P. We had a Nice quarterly bounce. We're getting back into 760. I would still say that holds. I still don't see anything wrong with that. Let's see what happens. 763 would be the real tell. Okay. Lots and lots of divergences helped me hold shorts from the top. And that's why I hope you saw some of that intermarket, right? So there's macro. I'm a bond bear. Rates are going higher. Inflation. I'm a huge inflationista since July of 2020, and nothing has changed my mind. I've been a things over paper also advocate. In other words, the energy, oil, just things, real estate, food, for trend trades. I look at my intermarket very, very closely. And obviously dollar makes the weather, but that's not been so much, there hasn't been so much currency volatility. There's been a lot of interest rate volatility. And then I was very firmly a bear, obviously, on the distribution of selling from my intermarket analysis. So there's all kinds of reasons I have held short, and I've also warned on Twitter, we're not done going down. So knock it off. Buy once we've actually created a base. We haven't created a base yet. Oh, thank you, Tim. I am more than glad that you are also part of this. You have your experience in trading around core positions with options has been phenomenal, really good. All right, I haven't looked at meme stocks, but we will do that as well. All right, so I think I answered questions from John L and John P. If I didn't, hit me up again. So adding time, if you do that, for example, then be prepared to defend. So in other words, if you're selling puts at this level, or even a financed, call spread, because you think we're going to have some kind of, announcement, Fed's not going to raise, or, Russia left, something, then just be careful that you know how to defend if wrong. Because yesterday, I remember folks were asking, what about selling puts on RSX? We've made it back, to some key trend lines, which were basically this 2144 before this bloodletting. And I said, just let it fall. Let's just see what happens. Let's just let it stabilize first. So I have the same type of feel that in the world of Tesla, for example, we're not done going down, but we can absolutely have a reflexive bounce, which we're doing. A solid 60 points. Talked about that from pre-market. Craig, what else are you in? I know you had Nasdaq short, gold long. We both did. We were actually both maximum bearish, and we talked about this in direct message a few weeks ago. And I'm like, you can't be max bearish if I'm max bearish. One of us has to be, yeah, it's still a thing. I don't understand your question about the big megaphone pattern still valid. Hold on. You mean this megaphone? Hold on. Where the heck is it? I got one of these in here. Oh, it's SPX. Yeah. Okay, hold on. I know what you're talking about. Maybe I don't. Where the heck is it? Give me a second. I do not remember where I put it. No. Really? It's impossible. We're right on really strong support. I will give you that for SPX for a fib level, but I'm not finding it. Hold on. That is fascinating. I've lost it. All right. So besides this bounce, hold on. Megaphone. All right, so 315 has already served as very strong support pre-market. We've literally reflexively bounced off this 100 week right into resistance at 326.64. So that's pivot basically, right? So let's see what we've got for a little bit more push to fill the gap. $321 level by level. Let's see where we are here. I'm still trying to find that. I can't find it for some odd reason. I know what you're talking about, the megaphone. I just am not finding it. Big bounces off the 100 in BABA. Strong, strong. Anything that we opened up so severely down, we have bounced with not only the main indices, but also the mega cap tech. And why? Why was I bullish this morning? Again, this literally hit my level perfectly. Tesla hit my level perfectly. It's just a reflexive bounce. It's a perfect time to profit taking on extended standard deviation moves. That's all. That's the only reason. It hit my price targets. It's extended intraday profit taking. They're not dumb. They're going to take some outsized profits off the table and then reassess. That's it. Big picture though, we're still not safe. I can't find the megaphone that I sent out. I'm struggling to find it. I know I posted it in Slack. I'm searching, but it's not there. Anyway, it has 4,000 as a price target. I know that. Beats the heck out of me. All right, semis. Yeah, in the video already filled the gap. Yep, same idea. Look at that. Beautiful. All right, so that's the easy trade. Positioning short into price targets that then bounce like a mother right into resistance. By the way, resistance is still up here by the 3-day. So look at that, 230. That's filling that gap, but quick. And everybody's going to say, woohoo, we're done going down, right? That's what they're going to say. All right, got Biden speaking. I haven't even gone over any headlines. I'm looking at it, ECB, et cetera. Biden planning to speak about Russia's invasion of Ukraine about 12:30. Oh, we'll totally get a chance to short the rip again. Absolutely. All right, I gotta admit, I can't find the bloody thing. All right, so I already answered the question about profit taking into resistance. We've talked about VIX coming back down temporarily anyway. Still bullish. Yeah, we need to break, I would say, this 34.40 to gap fill back down to 31. And then we can kind of base and head higher. Yeah, that is definitely not softening yet. The dollar, in other words. So watch the bond market. We're getting support at that 67 again. So there are a few swings that are still swings. I don't think that this profit taking is going to change my mind. Okay. I'm just going over this for clients. If you're kind of new, you'll understand I need to kind of cover some stuff that is still in motion that I don't think has finished. So Starbucks, when this broke the 107.5, All right, that's the channel. It sliced right through it. That was going to be gap fill with an overshot to the 200 week. Unfortunately, despite this hitting perfectly, right? We talked about this. These are the daily price targets. This is the weekly price target with an overshoot. Unless this gets and closes above 91.55 this week, we still have another channel to fill. More likely, we're going to go sideways around this 200 week. Same thing with Nike. That is a gap down on a weekly. We broke through the 50 week. That is busted. I know it's a favorite consumer and all that. I still have 125. It has not, it's not done going down. Yeah, it's just not done going down. And Disney, I think, is honestly just starting. So I really think this is going to be a digestion period here as the market we literally bounced perfectly at the fib level. 78.6 fib level on this weekly. Boom. And for SPX, we already know 4129 daily, gorgeous. Nice bounces. Doesn't fix what's broken though. And believe it or not, look what's going on here. You think if they were so committed, you'd see this in the green. They're still selling what has profit. They're still selling to lighten up. They're still selling to meet margin calls. This is not green. This is not safe, period. In fact, we're in the next channel. Not even a little bit green. Still on the floor. All right. 81% downside only. We need a 90% downside. Yesterday, I think we only had like 76%. Terrible. These are just bounces. I'm still seeing VIX sideways for the most part. Tesla, massive. Bounce right into 762 and then it pauses. Look at that. Look at that. Gorgeous. That was it. All right, let me go through and ask a little bit more. Oh, I didn't do UVXY, but I did the rest. So basically this is VIX. As I warned, this is still a gorgeous. I'm sorry if you're not believing me, but this is left shoulder, that's head, this is right shoulder. I said the crossover of the 10 and 21 week would take a little while. We had a bullish engulfing, right? That was very, very bullish VIX, which was another thing that confirmed we haven't even seen volatility yet. And that's why I kept posting that. Then we closed last week above the 10 and the 21 on the weekly, right? So another thing that gives me kind of conviction here is we haven't done that since COVID. Have not closed above the 10 and 21 since the COVID explosion. All right, so 23 is still a line in the sand. We are going to stay above 23. It is still swing short, period. Take some profits, reload, however you want to do it. But we are still bullish on all time frames. Okay, I don't do UVXY, I do VXX, but it's the same exact thing. Right? So let's at least see what happens at the 200 week. I know you've got commons versus options. Okay, for BABA, I think I did that one. This is depending, you got to tell me what your time frame is, right? So I've been months and months bearish. We had a massive sideways the past few months and then a rollover. To me, this is still short the rip. I just don't see any reason yet to go long. We need a massive reversal here. Let's just say, for example, next week we open up and we turn green and head back up to 36 and on our way to 38. I mean, only way I'd be bullish is if I see a capitulation on the weekly that is bullish. And that's not it, right? That is exactly what I've been looking for. Since that gap down, that's also, by the way, monthly. And that's also monthly. I mean, this is just, I know boring, but the point is if I can see an ETF, like calling EWJ, that was a fake breakout, fast failure, and it was going to roll over. And it's still rolling over. I don't see any reason yet to cover. I just don't. This is the COVID vaccine announcement. Boom, sideways. Breakout was fake, rollover. These are just gorgeous. They're still gorgeous. EWG, Germany. Oh my God, poor Germany. Talk about slammed. They get most of their energy from Russia and most of their commerce is done with China. Perfect short. They've come back down into 28.45. Are they going to bounce? Absolutely. Are they a short at the bounce back up to 29.5? Absolutely. I don't see anything here unless we get a capitulation candle like this, then I will be bullish. Right? So that's a capitulation low. That is a complete reversal of the trend. Boom, we go higher. That's what I'm not going to assume anything. In fact, I'm going to assume we're going to keep going lower unless I can see a capitulation. And I don't see it yet. And this is so much a dollar trade, right? This is also a short, very slow going short. That's a gap down. Again, all of this, emerging market, EWJ, AWG, et cetera, not EWZ, that's different. It's got so much in raw materials, but, and not RSX, because that's obviously very specific. But this is, for me, wait until it forms a bottom, shows me a strong reversal. Okay, so most gaps have been closed, am I right? Look at that, it's picking up to the downside. It's still not safe. Solid. I mean, this is intraday on a 15-minute. Not that I recommend that. I don't personally trade from a 15-minute, but look at this. Gets into resistance, fades. Resistance, fades. There's nothing here that says we're done going down. We had a solid reflexive bounce, and that's it. All right, Justice Department's going to block a $13 billion deal by United Health. So a lot of these, by the way, are starting to fashion Head and Shoulders. They're not very clean. A much better one, and we're going to talk about this one. This was a gorgeous Head and Shoulder recommended short right into resistance. I updated this just the other day with this price target. So we have hit 65.5 perfectly. So let me just kind of bring that up and show you where I think we're going to go from there. Yeah, I didn't get a chance to update these from the other day. I apologize. All right, so PayPal, long held short into 82, almost there. Gold, long, doing great. No problem with that one. AEM reports today, and it's obviously going to shriek higher. Where's my XHB here? XHB. All right, this was, we're coming into some support right now, which is at 65. That was a head and shoulders, very strong, compact head and shoulders, by the way, I love, because they're going to be fierce to the downside. This is a little intermarket flare that I add, which basically said we were going to trigger and roll over. We did. This has been a fabulous short. Here's my head and shoulders on a little bit different time frame, day, week, and hour, 65.46 to be precise, and we're there today. So do I expect a bounce? Yes. Do I think the market is still in trouble? Yes. And there's a lot of room to the downside. Okay, a lot of room to the downside. A lot of folks have been obviously holding out in real estate, not just physical, but also this ETF. So take care that even though I see a bounce, the trend is still busted. All right, and all of these trades I've already updated, you know, yesterday and for months before that. I still think we have risk. Keep this FTNT 276 in mind. Let's go here. We tagged this morning and bounced. Now, what are the chances we're done? We're going to just fly higher. I'm a little suspect. Let's just put it that way. Tomorrow, we could completely reverse this and head back down. But we did tag it again, this 276. That's the trigger. When that breaks, this distributive top is busted. The first time we always bounce the 50. The rule of thumb. It really works. Right into resistance. Took a few weeks. We tagged again. We bounced intraday. They really going to take this higher? Are they really that confident this is going to move higher? Color me skeptical. That's just color me skeptical. Okay, crowd. Team, let's go take a look at team. Team also hasn't busted 250. That's price target. Let's see where we are. Nope, we haven't. We literally, price targets, technically speaking, have been working brilliantly. We tag, we bounce. You really think we're done? That's a lot of support right here. I still say we're going to 250. Same thing with Pfizer. This has been a great short. I still think we're heading down to 41 and change. So I don't think we're done. I just think it's pace yourself. Sorry, it's really busy. Yeah, we're almost there. ARC, how we doing? Fabulous bounce at 60.5, isn't it? All right, so price targets really, really work in my world. I post them in advance. We go over it, profit taking, bounce, and then set it up again. Or at enough time, go out in time, May, June, September, I don't care. It depends on your own threshold of risk tolerance and the rest. I still think MDB, yes, I'm answering questions, is still a, for lack of a better word, a honking short. Big head and shoulders with a gap down. Recommended that very early. We've come down to the 100 week. We bounced into resistance and now we're revisiting it. We need to break 324 to really be busted. Give it some time. We're having a very strong reflexive bounce right back into the 3-day, basically resistance. I don't think that the trend is going to be fixed by an intraday bounce. I think your May puts are brilliant, Sheena, for USO, for CVX, for Exxon. I think we're going to come back down with, again, market weakness, profit taking in the energy sector. This has been strong, strong trend play for many, many months. But I think right now there's intervention that's going to come in, as Bob talks about repeatedly. And they're not easy ones, though, I will admit. For example, I think you said USO is not a great player for puts. I like your solid plays of Exxon, but for example, tail risk, higher, shrieking higher, right? 125, 150, and the rest. A lot depends on the yield, the 10-year right now, and that's softening. So I really like the idea of tail risk hedges, both higher and lower, but more specifically, it's a lot easier to chart right now, XLE and XOM and the rest, and they have been softening. So we need to break the 76 to really be in play. Right now, it's too spiky. Just way, we're already past 100, dollars in oil. It's a little bit easier to buy puts in the underlying. CPE is too choppy. It does trade like flat oil, but it's the options market, it's just so choppy. All right, wow, we had 5 billion shares traded in the first hour. That's impressive. Wow. All right, let's go back, because obviously we've had our bounce, and now they're gonna test all those new bulls that just came in to buy the bottom. All right, ZS has earnings. Baba has earnings after the market close. Yeah, I think ZS is still going to disappoint. All right, so the 3 plays that I still think have not broken down enough meat on the bone that are very large consumer plays: Disney, Nike, and Starbucks. Starbucks being the one that's most on support right here. Baba, definitely chance of breaking back below. What else? All the financials are on support, right? So that broke down beautifully. Had that in Chase a few days ago. So add time. Little bounce back up to 38, then a rollover. Add time. Okay, let me do the, if I have to, the crypto. Okay, UK pushes for Russia to be ejected from the SWIFT system. Hold on. Banks getting, yeah, Deutsche Bank effect with the risk to Germany, obviously both selling off very, very hard. Still watching that support area. I really am wondering if we're going to get some resolution next week. That might be a very big surprise. And these can base and turn around. In the meantime, they are flat, broke, busted, not safe. And stuff that has lots of room to the downside still, I'm afraid. I mean, we got some Eiffel Towers here in Ford. It worked perfectly to 25.50. It was a fabulous trend trade. right? That was monthly resistance, gorgeous. Morningstar reversal broke the 10-week. Here's a 30-week, bounce into the 10 again, digested, we're down to the 50. This is breakout from that monthly, and now we're all the way back. That's tough. That's really not a good look. GM also traded right down to the 200-week. Yeah, so technically they might have a bounce, but both of those are broken. NVIDIA did its job. It came all the way back into gap fill, and now it's softening. Still looks okay above 218. Not okay when it breaks 208.75. Then it's got a nice big channel lower. Nice big channel lower. So that's basically the trigger short. So on yields, how do they do some of that? Oops, sorry, IRX. So I do use monthly charts. Like, for example, I'm going to show you this. Okay, this is crazy. We're all parabola traders. I've tweeted that and I've written about that, but I've also been a really big yield spike watcher. So let me show you stacked. So first and foremost, I do stuff like this. I over and over and over again, I repost and these updated charts. Okay, let's just see which one is which. There we go. So for example, I posted this one in February, you know, not so long ago, right? We're kind of pushing on up into some levels of price targets. And where's the other one? Why isn't this? There we go. And that's from January. So I update this pretty much every single month, or if it's a big trend, quarterly. But the point is, we had a very, very strong channel of heading back inside for higher rates, long end, short end, doesn't matter. I do my intermarket thing, and then I take that and I go right into price targets. So I literally had price targets when we triggered above 0.65 in the short end of the yield, which moved MOVE, treasury rate sensitive risk, much, much higher, even though credit wasn't blowing out. Bonds were absolutely rolling over. I've been a big bond bear. We got to some key levels and then we pulled back because we get extended. It's like anything else, a rubber band gets stretched too far and then it comes back. So I still use the 10 technically as, okay, this is the trend. We're moving really high. 4.2, which is actually 0.42, was a monthly setup from, guess what? COVID, okay, when we started to crash. Basically, I can also, and I always chart the 5-year because it shows the tightening in the system. So the 5-year yield did a fabulous job of consolidating sideways for many months at the 200-week, staying above the 10-week, and broke out and kept moving higher into price target. And then it softens. And it's pretty darn typical that once it gets into some key areas, whether it be fib or, you know, monthly resistance, it starts to pause. Okay, and now we're having the Ukraine invasion and repricing of the expected rate hikes, the speed and the frequency. Oh, excuse me, and the amount of rate hikes that are expected to be announced at the FOMC meeting. I still see this as a bullish trend, by the way. Nothing has changed, whether it be the 30-year. Okay, we're absolutely still in play. We're still bullish, or the most common one, which is the 10-year. I use some technical analysis, right? In addition to the backdrop of macro, that's basically my thing. And then I'm looking at when we do come up above some key levels. This happens to be a quarterly level, 1.94, right? We usually retest below it. Honestly, we get everybody excited and it's a bull trap. And that's when I recommended going and doing a bounce in TLT. And I post that. Oops. Hold on. Oh, there's the mailman. And then I post that with levels and basically say, yep, very strongly think we're going to have a bounce now. Craig is doing his analysis also, not just of the oil market, but the geopolitical risk and how it affects the dollar. But I'm also kind of updating particular key concepts of when is it a good time to enter, for example, a put spread ratio, when is it a good time to cover and expect a bounce. So I'm actually shocked I can't find that, but right offhand, but I want to show you. So let me do that. So here's my level. Let me just show you this, for example, okay? Stall speed, February 15th. Let me see if I have actually posted that. TLT breaking 136.61 weekly close is uber bullish. Until then, yields on both short and long end can bounce, can come down. So I basically am putting all of this analysis in there, right? And basically with my, let me just find that chart as well. Sorry. Files, where the, I'm watching also the, we're busting above 105 in oil. Good, good. All right. Yeah, I'm following that. Thank you. All right. So big picture, I've got way too much that I'm trying to cover and answer all at the same time. So I want to just be careful that I'm not missing anything that's happening in my trade alerts. All right. So let me just show this to you because I think that'll make it a little bit clearer. So even though on a monthly, just to answer your question, this is that 40-year, 36-year, whatever, channel of higher bonds, lower rates, right? In a nutshell. We fashioned a head and shoulders. This happens to be on a monthly. It happens to be the 30-year. The point is we fashioned a head and shoulders. We have a new rate regime in play, right? With inflation spiking and the Fed wanting to be politically, let's just say, in line. So they have to do something. Monetary policy has changed. They're going to taper and they're going to hike rates. So they claim, and we're going to get that announcement in March. So we've got a long 14 days to go before that announcement, by the way. In the meantime, this is definitely fashioning a head and shoulders. My intermarket has said we're going to weaken. Bonds are a short. I do TLT mostly, obviously. But the point is, that's what got me into this and waiting very patiently. And so I am, however, aware that we can have short duration bounces. And my point was that at 1.94, whether we spike higher in the 10-year, it's going to be a blow to tech. And if we fall below 1.94, TLT bounces, rotates out of stocks, so equities can't win either way. And that's basically been in play. So when you ask about this whole, how do you time yield spikes, it's very much a combination of the intermarket with the technical and the macro backdrop. And then I write about it. Hope that answers it. So it's up to you. If you are looking at the market right now, you can see obviously we had a nice bounce and now they're stalling. It's just literally stall speed once again. But that worked. 50-week bounce into resistance and then a fail. And now we need some event that's going to give the confidence to the market to actually take this back up. So you tell me what's that going to be? Because I have written about this. I don't see a bullish case. So this was posted actually a few weeks ago, but the point is, this is TLT when you're asking the levels, that's a technical level. So we needed to trigger a short down to this 138 area. We will blow through it. My projection was we blow through it to the 136 area, then we would bounce. And then once we break that level again, we're going to head down to 130. Level by level. This is not all at once. I hope not anyway. So we have a bounce in play. This is not 3 days ago, by the way, because this was, I posted that 14 days ago. So this is literally 3 weeks. And we're waiting now for TLT to have a decent sized bounce into resistance. It almost got there, but look how weak it is. This thing to me is still a rollover candidate with a whole bunch of risk to the downside. All eyes on the 1.94. That's what I believe. We're going to roll over to 1.8. VIX is obviously a little subdued right this minute. Wouldn't be surprised if we have a pullback to that 25.20 again. But we're still above 23. And every time, well, on the weekly, still bullish. Yeah, even defensives are getting trapped today. It's just not a good look. So in ETF land, basically Archna's Palo Alto and OLED are both doing gangbusters. We have some solid bounces off the 200 week. Some very solid bounces, for example, off support into 3-day. We're right back up to that trend line. Trying to stabilize, nothing very exciting, honestly, except some oversold bounces. But so far that has really served its purpose. So it has basically shown that we're still bouncing into that gap fill. Now let's see if we can have any follow through. Yeah, and the euro is still just in trouble. All right, so we got an oil spike, but energy ETFs are down. So that's honestly working. Risk off is still in play. Kremlin website is down. We have really fallen across the board in a lot of fabulous price targets. All I can say is we've got some really nice price targets. I would love to have confirmation though. That's basically how I feel. So yeah, coin is after the open, after the market close. I think they'll disappoint. All right, so we just went back up to that 327. That's basically where we're going to chop about. Disca. All right, let's do that. I don't have any feel for this whatsoever, or Viacom, honestly. Tim, did you trade this one? Because I have, this looks like garbage to me. Honestly, I don't see anything here, any edge. Yeah, I have, no, has earnings tonight. That's all I got. This is a mess. Yeah. For me, this is a no touch. It just doesn't show any pattern. It doesn't show, I know they're coming in with calls. I don't know if they're buying or selling, honestly. Got no feel for this one. And also, what's your time frame? Definitely let me know your time frame. Spreads are ridiculous. No, actually the April 2750 calls aren't bad. So this is the, yeah, the Direxions I'm not as crazy about. I like to do the kind of the IBB and the XBI. So this still has some room to the downside, in my opinion. And a lot of that has to do with the fact that it's heavily weighted with Moderna and Pfizer, and I am short both. So Pfizer has a fabulous look into 44. I'm sticking with that. This is a fabulous short. It has been anyway, a fabulous short. So it's slicing through the 200-day like butter. I think it's going to reach to 44, and it's going to make it very hard for me to be excited about anything in the IBB sector. XBI has already been taken out to the woodshed. It's in a protracted downtrend. I know this is very busy, but just here's the 200-week into resistance. Then it falls apart into a monthly, into resistance. Right now, all it's doing is digesting a monthly, but it still doesn't look interesting to me, except the fact that it's having it's extended, right? A lot of stocks are, a lot of ETFs are, they're bouncing into resistance. That's all it does right now for me, is show me that it's having a intraday bounce into resistance because it's extended. So LABU, the Direxion triple, the same thing. So many stocks look like this. Not perfect, but this kind of rollover. PLTR was a gorgeous rollover. ARC, gorgeous rollover. So many look like that. And they're having some very strong intraday bounces into resistance. Now we need follow through. So we need the next, not only do we need the day to close, but to see how this is going to do in the afternoon. It is on support. This is a fib level retracement on a weekly. It's been a price target for a long time, but do I trust it? No. Okay, Apple levels. Grab my chart from sector rotation in Apple. Right here. We opened, this was posted last week, right? 218, more than a week ago. So the trigger was 165.30. We opened up, we hit 157. Then we hit 150. That's definitely price target. I still see 145. So it's a bounce. And then I believe we're going to absolutely test the bottom side of this channel. So does that help? So far we've tagged So far, we didn't even get to 150. So if you're swing short, you know my levels. If you're chasing, we literally intraday, this is different from swings. Let me make that really, really, really clear. There are chase time frames, there's swing time frames, and there are trend time frames for me. So I look big picture. And size up where we're going, big picture, and then give the daily levels and the hourly levels, et cetera, et cetera. Still see 174.30 for Facebook, for example. Netflix, 336, strongly. Qs, look at that gorgeous head and shoulders. I mean, my goodness, all we did was hit 321 pre-market. We'll hit that again. I mean, sorry, 321 with an overshot to the 315, and we bounced back up to 321. We still have 303 to hit. I wish I could find the wedge on the SPY. I don't know where it went. Anyway, this is still in play. So I'll have to update those, but as far as I'm concerned, we're not done. Okay, energy is definitely weak, but it hasn't rolled over. 10-year bounced right back up to resistance. Let's see what it does here. I think it gets rejected. VIX is sideways. Gold obviously tagged, and it's still bullish on a bigger time frame, but obviously major outlier. It gets a little extended and it comes right back down. Nice. As far as I'm concerned, it's a great time to go back long again, but we're not there yet. It's still settling. 178 would be, let's see, where did this take off? It opened at 182, hello, 178.65. So I'm going to just stick with this 179. Pretty weak. I still don't see any bounce that is really trustworthy. All right, let me go back and answer some more questions. Energy weak, we talked about that. I talked already about the bounces and the price and the inter-resistance. Oh, apologies. So this was last minute, right? Like this was like, I woke up and let's open the trading room. I'll answer some questions if it helps. I'll show you how I got into this short positioning for clients, and then we'll go from there. I can't get you access to Slack. Unfortunately, it's a programming thing. So James, my director, already talked with Zeke to say, hey, can we get folks in so they can look around and see everything, right? All the channels, all the contributors, all the intermarket, all the market macro, all the market thoughts, you know, all the chase, swing, and trend trades. We can't. In other words, there's a programming thing. Zoom is easy. You send out an access link. But there's onboarding and offboarding for Slack that he can't do on short notice. So maybe another time. All right, let's go over some other plays. Like you asked about Walmart. Big picture, we've broken down and we're rolling over. That's also a consumer play. 132 and change would be the next level for breakage, unfortunately. I know lots of folks have kind of stuck money in here for quite some time, but it's not performing well and it's starting to roll over. We've already seen results from Target. Costco is starting to weaken. a recent short has been Home Depot. And I love Home Depot. It's been a fabulous trend trade for a long, long time. But it did this very large expansion bar and then a double top, broke the 10-week, and then gapped down, came to the 50-week, which, by the way, I've mentioned is a very, very high probability trade. The first time it bounces, the second time it breaks. Bounces right into resistance, boom. And then what does it do the second time? It breaks. And it didn't just break. It gapped down. This is busted. This beautiful Home Depot that has been a trend trade for so long is busted. So it was funny yesterday. I was joking about this going, I think we're going to tag the 100 at exactly, and I remember I posted this. Okay, so cover some shorts. Where the heck am I? At 310.36. And we did. We stopped going down at 310.36. Well, look at today, right? So this is a gap down, far extended as far as selling. Would not surprise me. This level, you can kind of see a fib level right here that we're on a little bit of support. But ultimately, this is what I'm talking about for Apple as well. This distributive top, we broke the trend, we bounced right into it, then we sliced through the 50. Now look at Apple. Got a similar thing going on. We haven't even come down to the 50 yet. There's still room to the downside in this market and in these FANG trades. They're just not going to be going all back up to all-time highs, in my humble opinion. Netflix, I posted that one. I'm sorry, 336.40. So we're having a definite little shriek higher here in FANG stocks, but this is the level. I don't know if you can bring this up on your charting software, but this is bounce level, okay? And that means Netflix and Tesla and Apple, oh my, but we're busted. We broke through the 50, we bounced right back into it, then we get to the 100 week, we overshot, we come back into resistance, and then we have lower levels still. There's a lot of work. We've already removed yesterday, before today's mayhem, we were already reversing 1 year of gains, 1 year of gains wiped out. So will we have a bounce at the 100 week? Absolutely. Same thing with FANG, right? We've overshot it. Here's monthly. That's actually monthly. But the point is we've overshot it. That's my level right here. But this is busted. Look at the monthly on New York FANG. Okay, we've just come down in my price target. We've overshot. Gorgeous. Can we have a bounce? Absolutely. But we're busted. Apple on a monthly. Check that out. Gorgeous. Okay, that's a trend reversal. Semis. Morningstar reversal. Came right back in. Look at that trend line tag. We got right back into resistance, rejected. Semis, there's a lot more meat on the bone to short in semi land. Google, rolling over. Microsoft, fabulous short into 280. And I said it would be there by the end of the month. And now we're bouncing viciously on support. Totally expected. Look at it, totally expected. Qs, also, look at that, gorgeous. This is basically, take a look at this right here. That's a trend reversal pattern on a monthly. So we're bouncing on support, but we're still busted. This is the Qs, same idea. And we still have room to the downside. Will we have a vicious bounce? Absolutely. But at some point, they're going to come back in and whack-a-mole. IWM, already rolled over. The one saving grace on this one, we'll see how we close on the monthly, but this could be setting up as a 2-bar reversal, 188, 187.92. It's awfully close. It's way early, but we could have, no, I don't think it's going to hold, but that's going to be my next trigger. And here's diamonds on a monthly. So we have definitely broken trend on all the major indices. And we have some extreme moves pre-market, no question. Here's Tesla. Messy Tesla. Let's clean that up. How do I clean that up? With the bounce right into resistance perfectly. All right, so we have below this 34.40. I know it's hard to see. Market is bullish. Okay, back down to that 31 is my baseline bet still. Big picture. Yeah, we need to get back above this 26.53. There's the 200-day in VXX. That's weekly resistance we need to get above. We can come back down to 25, no problem. No problem. That's market bullish. The bounce is still in play. There's no question we're having a nice, strong bounce, and volatility intraday is coming back down. VXX to 25, VIX, I believe we can come back down to 31 base and then move higher. But right now we're absolutely market bullish as long as this stays below 34.40 for VIX. Qs are already green. They erased 3% drop. MDY. Okay, we hit January lows. We're having a little bounce. I'm not, yeah, I don't obviously chart this one at all. What's running is a lot of tan. Run, that's bullish engulfing. SPWR, bullish engulfing, but it's still stuck below the 200 week. For solar, strong bounce. Of all of those, I like ENPH. Yeah. By the way, that was a great short. We had the 200 week, and I said if it breaks 174.56, it's a breakdown to 157. Now look at it, it's bouncing on Bollinger Band. This has still got a lot of work to do, but as a chase, TAN has recovered very strongly in this market dump. This is TAN off that 200. So we're having some really strong bounces. That's not including crude is up 5%, but the oil and gas sector is down. Everyone's very excited. NRZ, you did bounce off that 10, didn't you? But REITs, not so safe still. And why? They gapped down. They bounced into resistance, but did not fill that gap. They came back and retested that low, and then they failed. So I still think this is a phenomenal intraday bounce across the board, But I need more than just a reflexive standard deviation move higher. I need follow through, and that's really going to be tough since so much is busted. Okay, we're getting back above. So how long do I think the bounce will last? I would love to see my advanced decline come all the way back up, fill that gap. I would love to see VIX come all the way back down to 31. It's going to be some phenomenal bounces, right? They're already in play. But then I think it's going to be a bull trap when everyone gets way, way, way confident. It's actually very helpful. Market was untradeable when it opened up because of the explosion in IV, implied volatility. Now we have that IV crush going on. Very, very helpful to reposition short once this is done. And I don't think it's done yet. So the same thing, right? Bang. Where's the level? We bounce into the 100 week. We're not done yet. Advanced decline. We bounce and fill that gap. We're not done yet. Some gaps have already been filled. The Tesla is doing a great job. NVIDIA doing a phenomenal job. But this is still resistance. And we're still in a downtrend. We still broke, I should say, the uptrend. Oh, good for you, Mike. All right, so you bought near 700, sold 740. I still have 760. The top actually is tagging. Okay, the high is like basically 775, that trend line. Very nice. I hate to do that, but I'm going to do it right here. The channel is strong enough that we could bring it right back up to about 840. If we get follow through. Right now, that's enough. 792 likely hits its head. I mean, the big channel is 900 to basically 700, but in between these would be the two key levels, 792 and 849. Would not be bullish again until it gets above and closes above 900. If and when it could get back above 900, then that'd be much more interesting. But it doesn't look like it to me. It just looks like an oversold bounce. Same thing with Kathy. The price target for PayPal, it has been 4 months, is 82. And by the way, Square reports after the close, not PayPal, but Square. So there will be some effect on this one as well. Yeah. So this broke when they said they were going to buy Snap, or I think it was, I forget which social media play was the potential acquisition. And then they denied it. Anyway, this has just continued to roll over. I know I get so much here. It's so busy. Anyway, this is the clean version. Clean version is 82. And by the way, this is what I love about stochastics. When they get oversold and they stay oversold, look at this puppy. From 225 to 100. It's $125 in stock basis. It's phenomenal returns in swing puts that you just keep rolling. It's still not done. That's how I read a market. That's how I, say if it's safe or not. It's still not done. This was going to come all the way back to 82. I did the same thing with AFRM. Oops, sorry. Came all the way back, and then it busted. These are some oversold maybe bounces, but they're not at all interesting to me. Hood, coin, I think coin's going to disappoint. Anyway, Square reports, and they still have room to go. And look how it just stays oversold. Love oversold. And all this is showing is that we're having a spike, and then we're going to get to a point where it tires and it rolls over. It's just the nature of this market right now. So UUP and TSM, I'm going through requests and Zoom Q&A. This is the level I think we get, it retreats. Let me put it that way, David. So we've been here before in UUP. And we need to get and close above that level to move higher. And as I mentioned, I think that's extended. I think 97.50 in the Dixie is rejection. Once or if we get above, it's a whole nother ball game. Things are going to break hard. We're going to have really strong emerging market volatility. But for right now, technically, it's fading on cue. Or the dollar chart that I showed you, right? Which this is the much better one to use, right? So if we get above 97.50, oh my. Otherwise, we run pretty much up to it and we're getting rejected. So let me just see something. Do I have that chart? Oh, so many levels I got to update here. All right, and then TSM, Taiwan Semiconductor. Well, you know my position on semis. I think there is a massive amount of unwind yet to come. So we talked about this. Anything below 127 is a short. As far as levels, I think semis have the most meat on the bone to go short. This is just getting saved by the hair of its chin chin chin, but I just don't think it's gonna work. So semis are, for me, in big distribution, and they have been the least willing to fall apart. Look at that gorgeous morning star reversal, trend line tag, bounced into resistance, and now we're right back to it. So could we go sideways around that 258 for a few days? Absolutely. Yep, we could bounce right back up to it. Look how close we are. We could bounce right back up to it. But big picture, let's see how we do at the monthly. But I think this is just setting up to probably go sideways another month, and then we're going to break that. Yeah, so we could definitely have a theta decay killer for the next month. That's the tough part about this, especially with put so extended. But you're still on the right side of the trend as long as it stays below 127. I know that's a big picture, and we need this one desperately, but you're still doing, I'm going to get rid of this real quick. You're still doing well. Here's the bounce level, right? It's going to take some time, I'm afraid. So know your time frames, but this is definitely price target. You're there. We overshot. We came right back in. Not a surprise. Now what this does typically, and I'm really frustrated because it's not so easy to trade this one. Options, they're getting a little busier. They're a little wide, but not undoable. We still have a relatively decent IV as well. Next level with the next, I should say, when this next breaks 107.84, we've got 93.81. And then 77, you get the picture. So we're in distribution mode. It could be several months before we actually come down and reach that 200 week. Bostic is out saying, I'm open to 4 rate hikes, possibly more. Carvana, Simon, is a continued short. This hasn't even come all the way back down, right? So 99, and then I think it's going to get cut in half. Very tough market. Used car sale prices are up 40% year over year. They don't have enough inventory. It's unprofitable. The valuation is still expensive, relatively speaking. Oh, speaking of other, yeah, so we're bouncing on snow. I think snow is going to break the 240. Next, So they're not, yeah, they're not, I think, going to be saved. The valuation on that, I think, is like 33 times still. That's very expensive. Where is my? So the four that we talked about recently that were new additions, snow, yeah. Oh no, that's actually like 47 times. So this is still very expensive. We tagged the 240. I need to get some lower price targets here because I absolutely think this is gonna fail 240. But that's going to be the next trigger. Net, still short, bounced into resistance, got rejected, roll over, 61.86 in time. Right now, we're having a solid bounce, right up until probably 102.61. ZS is tricky because they report after the close, but I expect disappointment, and that's 33 times. Net is like 36 times valuation. Datadog looked bullish, and I don't mean just intraday here. Nope, nope, no. I'm talking about big picture. That's the trend line it needs to break to get to keep going. I still think this is way expensive. It's about 33.5 times. So I'm not excited about Datadog swing long. I'm not excited about Net yet. I think that has lower. Snow, Carvana, Bill. Exactly. Yep. In the meantime, we're having lots of bounces on, oh, wait, before we do that. And then more mainstream consumer plays. Disney down to 126. Nike down to 125. These are still in play short. And Starbucks, I think we're going to head lower to about 82.80. All right, so RSX is down. That bounce did not hold. Why I still don't think it's safe to just get involved. I don't think it's safe to sell puts against this stuff yet. I really would caution, hang out, let it fall. In the same way, I'm like, just let PayPal fall. It's just a gorgeous short. Just keep rolling your puts. Rivian, we did, yeah. I am shocked this hasn't fallen apart more. Okay, so it has the same look as many of the others, and unfortunately, so yesterday was lovely. It did obviously break the Bollinger Band, but it's bounced right up into resistance. I am not bullish. I think this is obviously going to, you know, get tapped down again. Back towards 50. So let's see what it does at this 60 level. That's a little bit of resistance. NEO, not enough of a bounce. It took out beautifully the January lows. I mean, this is still a gorgeous short. Yeah, all they're doing is bouncing into resistance. This to me is not swing long. It's safe. To me, Lucid, I know we had that break, gorgeous, and then it's sideways, which is theta decay because it's going to slinky around the 200, that green moving average. And then finally it broke 25.66. Looked like a really nice waterfall, but everything right now is getting a little supported as VIX comes back down, and they're trying to downplay the rate hikes and the invasion. Oh, I don't have a position with Carvana earnings. I have absolutely no edge. But I will say it's a lot easier to trade after the fact, right? Or have a defined trade. In no way would I be adding any directional business here at a 300-400 IV. That's insane. For me, I would never do that. That's a Tim speciality. So he would take that IV, absolutely. And I think what he would do into earnings, and correct me if I'm wrong, Tim, you would buy, let me do this. You'd buy one at the money put and sell two out of the money calls to take advantage of IV crush. That's your secret sauce. Yeah, I would wait until earnings are out of the way. Or just hold a put spread long, expecting it to disappoint. But I have no edge when it comes to how they're going to announce, right? So not my game. Unless I have a really high conviction like that hog. Rarely do I do an earnings play. Hog was one of them. But anyway, this is, it's got to be, for me, it's much easier to chase after the fact, right? And they have been absolutely getting sold. Remember ENPH? Gorgeous short. Google, gorgeous short. So the mood has been guidance sucks. And so they might have a fabulous earnings report, but then they trip it up in the conference call, and it just has been a gorgeous short after the fact. That's me. All right, so I already did the Microsoft. I'm still looking for that megaphone pattern. So Overstock was a funny one yesterday. I mean, it was hysterical. I have not looked at Overstock forever. And literally I got an alert that it tagged monthly support, which is a trend line, excuse me, a monthly support that I put in there back in 2020. And it bounced right into resistance, 50.65. Isn't that too funny? And then it tagged out literally at resistance and came back inside. So to answer your question, what do I think about it? Not much. I really don't think about Overstock. It just happened to hit my radar because I had an alert. Long story short, when and if it can get back above 50.65 and hold it, it's long. Otherwise, it's channel surfing. There's lots and lots of channel surfing in this market. Google. Yeah, we're on the 50. Unfortunately, that's very weak. So hold on. Come on. That's Microsoft. Here's Google. All right, so big picture, Google's in a head and shoulder pattern, right? That was earnings, this spike, which we shorted, was gorgeous. All right, so now level by level. For me, big picture, this is the red box is, okay, I'm wrong. If we get back above 28.57, we can move higher. This can be, head and shoulders, by the way, can be very strong trend reversal patterns. They can also be continuation patterns. If they're very tight together, like that XHB, they're typically a strong short, which is one of the reasons why I showed that particular chart. In this particular case, I just see lower. So we tagged the 50-week. We then had a massive earnings overreaction. We have since taken out not only the 200-day, remember this was posted a little bit ago, but this is the trigger, 25.86 into these levels. So let me just kind of bring up Google right now and kind of overlay what I'm looking at. All right, so there we go. So we're stuck. This 25.86, that's the level I was just showing you as a trigger for continued swing short. And then here's 24.31, 22.74. All right, so that's trend line. That should get another little bounce. So intraday, we bounced firmly right up into resistance. So you got to tell me what's your time frame. We get above this 25, let's call it 70. We can move into the next little channel. Otherwise, from a swing standpoint, this is a continued short. We haven't even tagged my next level yet. Does that make sense? So that's just earnings, breakdown, bounce of the 200 into resistance, breakdown, happens to be some support right here. It's the January 24 low. Remember that one? It also happens to be on a weekly, a Keltner and a Bollinger Band tag. Okay, so what we've done is basically reflexively bounced into resistance, but this is still busted. So the trend is still broken. Yes, I think if the Fed doesn't move, well, there are two things for the Fed move in February, right? We still have like what, 14 days for that action. If they don't, the market's going to punish them. If they do raise, I think market can bounce. So it's sell the rumor of hikes, buy the news of hikes. That's been my baseline for months. Sell the rumor of hikes, buy the news of hikes. Baseline hasn't changed one bit. That's my baseline bet. We're pausing. This is what we do. We bounce into resistance. And then what? Then I go back and I look at my intermarket. How strong is the market? I can tell you it's busted. We're rolling over. That's distribution. Since June, specifically since November. And look at that. Look at that. Boom. That's not safe, except for an intraday scalp. Then I look at advanced decline and I'm like, we haven't even filled the gap yet. Come on. We fill the gap, I would feel much, 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 much better. This is unfortunately really weak sauce. That's what this basically tells me. We haven't even filled the gap in advanced decline. Come on, give me a decent bounce to short into. But I can tell you from cumulative volume, we're still selling. It's not safe. There's no sign right now of buyers. There's short covering. Absolutely solid, reflexive, short covering, standard deviation, outsized moves, boom, right back into resistance. But there's no bid. You want bid. You want stuff that looks like this. Okay? This is the Pfizer, the Pfizer vaccine announcement. And then we had the blue wave. Look at the green bars. Then we had a pause. Look at the green bars. Then we had a pause. Look at the green bars. Then we had a pause. Look at the green bars. Then we had a pause. Look at the green bars. Get my point? What do we have now? Distribution, sold to you. Distribution, sold to you. Distribution, sold to you. 50-week bounce into resistance, break the 50, sold to you. Does anything here, if this was any chart, would that look, would that look bullish to you? Would that look like we're going to all-time highs tomorrow? No, we're still selling off intraday. It's just not what I would call a good look. Oops, sorry, it's not what I wanted, that one. Yeah, so I would need to see some capitulation and some buying, and I still contend no bid. I'm going through Q&A. Sorry, ladies, I know. We usually end at 11, then I come back at 3, but I haven't even made it through Q&A. So I'm trying. And again, this, oops, sorry. Making a whole bunch of noise here. Oops, that's not what I wanted. And all of the stuff that still said we were in sell-off mode, in other words, not safe, I can show you, I will update for clients later. This was a rollover. This is now obviously firmly rolled over, right? Because we've had this shocking amount of selling, whether it be McClellan summation on SPY or Nasdaq, this all said risk off, risk off. So when you're asking about intermarket stuff, I can show you breadth. This is a fabulous one, for example. 99% of S&P 100 companies were above their 200-day. Did I just say that? 99%. Yep. Of the S&P 100 had price above the 200-day back here at the beginning of the year. We broke. This was a level to go short. This is kind of like the mean. This is, and I kept saying, we're not oversold. We're nowhere near oversold. All right, so I update this all for clients. And then when I start to see reversals, that's when I say, we're starting to get safe again. And I use all kinds of indicators. Some are also homegrown that wouldn't make much sense to many people. But this is also a warning. Back in October, we're starting to roll over. Caution, caution, momentum is waning. All right, so this is what I mean by I do a lot of intermarket that gives me a tell of when we're going to have divergence, huge divergence. This was a big thing for me. When do I know when to go long? When do I know it's not safe? We had selling, massive selling under the surface, but SPY was way the heck up here. That's a divergence. Get the pun? We were going to catch down. So it's too much to kind of share all the secret sauce, but for right now we're doing price action, and that is a reflexive bounce into resistance, waiting for a better setup to short. Corn, yes, Dennis. DBA is full of the agriculture plays. That is a ginormous reversal bar in DBA. That is some profit taking. Not unsurprising at all. Okay, wheat, Russia exports about 5% to the world. Inflation, war is very inflationary. We've already had tremendous shock to supply chain, to distribution. The stress is obviously there. It's not going to be made any easier. So yeah, I've been long as well. So this is a really, really telling time. We got extended, so we're having some profit taking. This happened before, by the way, where we had an outsized move in corn, and then we had a ginormous expansion bar to the downside to bring us back to the mean. Took a little while. A lot of money kind of like got there and stayed and didn't move. Then we finally broke out. You can see the 10-week, beautiful. Same thing, honestly, with the agriculture plays, also trend long mosaic, gorgeous. It takes a little while, and you got to look at on a wider time frame. But for me, this DBA had some profit taking as it got a little extended. 2152 was monthly resistance. We literally overshot and came back in. So that is a very large expansion bar. It's also called bearish engulfing. 2152 is the level to trade against for DBA. Above is bullish, below is profit taking. Would not surprise me to come all the way back down to 2037. We could still base here and move higher again. So wheat, corn, coffee, soybeans. But just kind of keep in mind, this is very bearish on the day. We have the 10-week, if you overlay that on your weekly time frame, 10-week EMA, that's likely where it's going to head back. When we get extended like this, we come back in. I did this with Berkshire, the same, it doesn't matter what the stock is. So with clients, long Berkshire Hathaway, we got very extended, and I said, careful. This doesn't usually play so far away from its mean, which is the 10-week. And the next week, it came right back, not just back to the 10-week, but where it also broke out, then bounced. So, and we just talked about this yesterday. I said financials look like they're going to soften. The 10-year looks like it's going to soften. Market is weak. Expect Berkshire to come right back down. Expect financials to come right back down. So that's all playing out. Now let it base a little bit before we get our next setup. So 97.50, when Dixie gets above and stays above 97.50, when I say it breaks markets, because a large percentage of revenues are derived in markets outside the US. So dollar denominated revenues are going to take a hit, from Caterpillar to Procter & Gamble to Microsoft. And also it creates emerging market panic. So the higher the dollar goes, the lower the equities in other countries. So the EEM, for example, is an emerging market ETF. It's a dollar trade. As the dollar moves higher, emerging market EEM will break across the board. So that's why I say the dollar is a wrecking ball if we get above 97.50. I don't know if VIX is done or not. I'm going to have to do my end of day. Well, first of all, I've already given you levels here, right? So this is one thing. 34.40 is kind of, it's hanging out. This stochastics is still bullish. My stock bond volatility is still bullish. Market is not done going down. I'm looking here to see if I can show you. I really can't emphasize enough. Yeah, no, this is definitely still, to me, risk off. I still see SPX at 4,000, maybe even 3,800. Bostic is out talking about reducing the balance sheet aggressively and quickly. So Ukraine aside, we have that. I've been bearish before Ukraine on that. All right, so 10-year hit the 1.94 and it's softening a little bit. Nothing really exciting there. I would not short into the whole XLP. Yeah, I think that might, yeah, I like to short into the 200, but not at the 200. All right. BTU? Yeah, okay, so yes, this is CCJ, which is uranium. Still sideways for all intents and purposes. It tagged beautifully monthly resistance, which was price target. Then it pulled back. It's been kind of choppy and digesting. They're not going to build, you know, nuclear power plants overnight. This is a trend trade, and it will take a while. It has been a fabulous trend trade, but it is one for patience. That's all there is to say about that. All right, so BTU is a little bit different. So BTU was also a gorgeous trend trade out of this bottom fishing play. It's coal. I will admit that this was stunning, and then it disappointed. So it reached the 200-week and a fib level. Price target was gorgeous. Then it pulled back, broke above again, could not close above the 200. You can kind of see here, it kept getting resisted, and then it came all the way back down. And Anne is a much better trader at this. Oh my God, she's the commodities trader. It did base, however, it took a long time to form this scoop pattern. And luckily this, you know, action here is very bullish once it got above all the moving averages again. And then it triggered above 1431. So we were off to the races again. This was really beautiful. But it still has to close above 1877. Long story short, if it can, And I still think it's bullish. It's doing a really good job of digesting even this breakout, which obviously is getting tested here to the downside. If it can stay above, it's very extended, but if it can stay above here, it can move up to this 2261. Also, I forget which firm upgraded it with a 23 price target. Point is, it's very bullish if this scoop can stay in play. So keep the 10-week on your radar, give it some time. But Ann says careful, because it typically does this job of disappointing often. So you got to let me know if you're saying you're interested in BTU, what's your time frame? Trend bullish, swing bullish. Right now, it's not worth a chase. And I think it did something after hours last night. Did it do an offering? I'm not sure, but it needs to get back above 1760. Just sitting here. Next time it breaks this 218.67. So far, it's been supported really nicely here. First bounce, then rejected, and it did overshoot, and then it got right back up to this 229 is a price target. But I think it's going to have a really tough time getting above it. Remember, this is also the 200-day, right? So all we've done is revisit the January 24th low. This was literally price target I gave yesterday. We tagged perfectly, and now we're bouncing big time, but pace yourself. This is still broken. Yeah, Asana, another one. That was, so yesterday, this was a short into $50, and I said it might overshoot to 48. It did. Obviously, this morning, it did the same thing. It lots and lots and lots and lots and lots of charts had a low of January 24th or the 28th the same week before they popped, right? And this was a full reversal back low, back broken. So we're having a phenomenal reflexive bounce higher into 52.51. That's intraday price target. And then let's see. It's still busted. That's just busted. So the next time it breaks 43.72 on a weekly, you got some room down here. Otherwise, it's going to channel surf. But that's definitely not a good look. So that was earnings, got rejected, formed a Morningstar reversal, overshot, obviously tagged 43.72 again. And now we're trying to get back inside. The next time that it breaks, I'm going to say 48 is going to be a trigger for lower, but really we need it below 43.72. And Disney, a break of 138.80 will be the next weekly break. Yeah, I'm not bullish Disney, Nike, or Starbucks. Price target for the bounce on Qs, this we'll call it 323. It's still on its way. Multiple time frames, 323. Still in play. There's your NY Fang bounce. We haven't even filled the gap. So let's fill the gap first before we can have a really nice setup to short again. That's still my baseline. All right, so let me go over again. The bounce that we're having this morning, and I know, John, we talked about this, 5841 is the New York Fang, right? So the big tech is going to be defended first and foremost. They always go there first and buy it. So this can still move up into resistances that's 100 week. Or intraday, you can see it's just now filling the gap. So I'm personally not ready to reshort until we have that gap fill. Same thing with advanced decline. We still need to fill that gap before it's a really great reshort. So Qs are still bouncing. Lots of stocks are. And stuff that's dollar based though, not so much. Yeah. But as dollar comes down, then we start to get a little intraday support. Moscow Exchange, they're gonna stop trading over there. So dollar softening and euro dollars having a nice, now we got to have some follow through, but that is a nice bullish candle. Just again, still looks like in time, we're still going to roll over. This is still in a protracted downtrend since 1.19. What's 3 p.m. Eastern time? Oh, no, Biden's speaking at 12:30, I think. Bostic out saying Ukraine conflict affecting liftoff is not my model case. Translation, nope, they're still going to do it. Okay, we're almost at a positive here in hold on. We stopped going down. So there's that. We're still flatlined. They're still not ready. Yeah, no swing long yet, just intraday chases. Oh. So we have gap filled in EWJ, and here's the 200. So there's your H pattern too, right? Boom. EWG, we've got several levels of support right here. So we're having a little bit of a bounce too. And that times with EEM. Having a little bit of stabilization as the dollar basically softens, right? Right here, resistance. So everything is related. Apple got right back inside that trend line. Stunning, stunning move. But it's still not done. Still very much a cradle formation. Still opened up below 165.30, which was my baseline press short. Anything below this 176.73 is a swing short. So there's nothing here that says we're going to go take that out and move higher. I think we bounce into 160. That's pivot intraday. It's also a daily where we actually broke yesterday, right? I think we bounce into 160 and then we retest the whole thesis of how bullish folks really want to be going into weekend risk. So yeah, I don't think so. So that's why I say be a little bit patient that the gaps get filled. And then it's a much higher probability short. For right now, don't be in a big hurry. To me, this says market is still broken, but we're absolutely taking advantage of some reflexive moves here. So let it play out. If you're scalping it, let me know what particular instrument and what your time frame is. Adobe and ACN. Yeah. All right. So I know this is beloved, but it broke. So ACN was a recent short candidate, didn't catch any of that, but did say we stay below this, 345 area. And this particular doji was what gave it away. I said, yeah, I think we're gonna fail. So the first 50-week tag into resistance, perfect. All that resistance, could not get above 360. We rolled right over to the 50, then we broke the 50. And I said, yep, game is up. So now we are rolling over an ACN. There's lots of meat on the bone for this one. That one's just starting. That was just introduced last week. No, Tuesday. Forgive me. That was just introduced Tuesday. All right, Adobe's having a solid bounce off of the 200 week, and that's a bullish engulfing. So we need a little follow through here. Problem is, okay, earnings not until March. Okay, hold on. All right, so I would say bounce into 470, and then we get rejected there and head back down to 386. It's a dance. It is a dance. So here's a Morningstar reversal, bullish above the 10-week, gorgeous, extended Bollinger Band, came back down, broke the 10-week definitively, tried inside week, exploded to the downside, really, really poor action here, bounced into the 50-week, broke down to the 100, couldn't even get above 425 on a close. Bullish if we could have, we couldn't. We rolled right over. Okay, 470 was next price target. Obviously, we failed, had a minuscule attempt to get higher. Now we get 200 week, nice, solid bounce. Plus we have a bullish engulfing, I'd say probably one more day. Into 470, we get rejected, then we roll over to 386. Nice. Yeah. Adam, you're still short Asana. It's very, very strong today, but next resistance level, I think I already mentioned that one. Yeah, for me, it would be the 48. Hey, Kat. Home Depot. All right, so that got a little it carried away, meaning 310.36 was price target we extended. I would still, if we get any follow through bounce, I would say it gets into 310 and then gets rejected again, because this is so broken, sadly. I mean, it's a mess. And this is what I mean by we can have these one-day wonders. Check this out. This short right into the 200, then it's very, very hard to short into the hole, right? It hits 200, let it do its slinky, let it do its bounce into resistance, and then nail it short again. That's at least how I work. So that's the same kind of thing. Got right into resistance, boom. Now it's still the 200 that failed miserably, but the next level is this 100 week, very large expansion bar with a gap down below the 50. It's broken, very solidly broken. Wouldn't surprise me if we have a little bounce. So far, there's nothing in it that says safe. And the fib level has it at, hold on, let me just do this real quick. 304 will be the next level. We're already below it, but we typically have a little bounce here. I'm not seeing anything. Looks mighty soft. Mighty soft. I need to clean up a lot of that junk. So the next swing short price target, we first have to take out 393. That's going to be some support. Now you can even see pivot intraday is 311.5. Same thing with my 310, right? But it's definitely got some meat on the bone still. That's very broken. So when they are very, very broken like that, they don't stop going down for a long time. So we can have consolidation, but they don't stop going down. Okay, that's why I've been really adamant. Whenever I see a weekly gap down, I'm going to just keep eyes on the prize. At some point, there's going to be a capitulation low. I don't know if this is it yet. Right? So I'm still very, very much in the camp that we're not done going down in the market and it's not safe. So all we've done is bounce into resistance. All right, so I think we've gone over this so far. VIX is relatively muted for what's going on underneath the surface. Energy has absolutely undergone profit taking. Moderna still has room to fall into that 94.85. Pfizer still has room to fall into that 44. Nothing has changed there. This has been in play for weeks and weeks and weeks. Nothing so far in my bigger picture price targets are going to change my opinion until I can see the bottom form more than a one-day intraday bounce. So Tim, I'm seeing the same thing, and Craig, taking Russia banks off of SWIFT is a big deal, right? So at some point, not right away, but at some point, what are they going to sell? Their gold holdings. It's not treasuries. They dumped those back in 2017 when Trump came in. So they've got gold, they've got oil, tremendous amounts of that they can sell for currency. What's that going to do to oil? It's going to make the price come down with the intervention by Biden. So it's right now that premium in oil. I'm curious to see where we're going to ultimately tap out. I would say right now is what, 102? Let me just go grab my chart. TTD. I'm shocked. All right, so this is kind of messy. Big picture, I don't like it. It's absolutely, to me, messy, like way messy. If it could get and stay above, let's call it 81, it might be a little bit better. Obviously, we have a very large bullish engulfing so far. It's only noon time though, and Biden's coming up on the podium pretty soon. Well, I'm reading headlines constantly on the side just to see if there's any, besides the SWIFT, which I think is the biggest deal. I haven't seen anything other than lots of politicking. In other words, asset freezes, UK, sanctions, McConnell, that kind of stuff. But as far as anything new, Russian airlines going to be banned, diplomats going to be banned, but I'm talking about anything new. UBS is triggering margin calls. Bond values in Russia are now repriced to zero. That kind of, I'm seeing all that, but I'm trying to figure out where's the good news. Chernobyl has been captured by Russian forces. Dow is reversing. I'm shocked that the trade desk is actually so dang resilient, if truth be told. And I haven't checked valuations on this. IV is absolutely whacked. Earnings, not for a while. I don't have an opinion on this one. I really don't. I would say if. No, to me, it looks like a better short than a long. All we've done is basically slinky around that 200-day. Very bullish engulfing. This is true. Maybe it hits 83, then gets rejected. Next time it breaks 76, it's a short. But that's quite elevated, and I wish I had a better read on it. I'm sorry, I don't. Yeah, Arch was the better long-term trend play over BTU. BTU scooped a little bit too much, and now it's getting rejected again. Alcoa has been phenomenal. It did have a very large bearish engulfing, and now it's gone sideways. Looks like a rollover candidate because it's gotten extended, just like DBA, just like corn. Very light. Look at the corn was way. Yeah, tag 26 pre-market and then came right back down. Hasn't gone green, red, but these are capitulation candles on a weekly. Means they're going to come back down to the mean. Doesn't mean the trend is broken, but it definitely means they got super extended. Yeah, this continues to fade. All right, so that's my cumulative volume, and it basically says very weak despite the bounce. And by the way, that's already reversed. So it hasn't even filled the gap yet. Very weak under the surface. Gold got supported at 179.12. That was my price target, right? So we did really some strong profit taking. And then at 182.64 just happened to hit price target, and then it came right back down to the channel, and now it's getting defended again. Translation: if you want to go long gold, that's your low risk entry. In other words, it needs to absolutely hold this 179. Otherwise, it's going to fail and come back down, but I'm not thinking that's so much of a trouble right now. It looks like profit taking into support, literally 2270. Apple went only as far as 157 and change. Did not even fill the gap. It's early yet. Market's definitely, oh, Biden's remarks moved to 130. Dang it. All right, Tim. There's your level again, that's 760. So if we get back above 780 in Tesla, you know that channel, right? Right now we've bounced perfectly into resistance. Now we're kind of going sideways a little bit. We take out 760, we're rolling back over. We have a bit of a churn between 760 and 780. Above 780 is bullish. Ah, all right. So basically delayed until 130. All right, so Boeing. This is, I'm glad you asked about this one because I have no interest since this phenomenal distributive top back here and it broke. And this was very, very clearly, I loved this short. It had all kinds of issues with the dream, the whatever, 337. But the point was, this has been in this downtrend on a weekly, and then recently it gapped below 207. It opened with a gap down. So this was a short with that gap below 207. It is tagged every price target, right? And now it's into an area of basically quote unquote support. This 186, this 188.60. It's been here before, it's been here before, it's been here before. So right now it has to break 186.48 roughly to continue lower into this, let's call it 179. This is basically a channel. So I am not fond of trading Boeing except short, to answer your question. I don't think it is an easy one to trade, however, because it has a lot of headline risk. Jets right now has been rejected at that trend line. We were hoping, right, that some reopening plays would get lift off, forgive the pun, but sure enough, it just went up to that trend line, went up to the 200-day, and then promptly got rejected. So Boeing is part of this XAR, which has also been having a really tough time moving higher. Also part of IYT, which is having a really tough time moving higher. Unlike the, aerospace and defense plays that are missile related, they have been doing fine, but they're even undergoing some profit taking. Anyway, I just think that this is going to be a better short once it breaks 186.48. But for right now, that's the level where it's bounced before. AXP has been a fabulous long, but so back when it had earnings on the 20th, when was this actually? Okay, 25th, not the 24th. At it was like 170. And I said, this looks like it's going to clear and form a bullish engulfing. It did. It moved higher. It did not come up and tag that trend line, however, and now it's retraced to the 10-week. So as long as it stays above this 10-week, again, I use 10-week all the time. That's also the 55. Yep. It can still base here and move higher, but not with a market. Obviously, volatility reprices everything. Visa had done a great job also, gorgeous, off this monthly support at 196, blew through the next monthly support, fabulous earnings, was looking fabulous above the 200-day. Obviously, volatility reprices everything. it failed to 28.68, which is monthly. So from monthly to monthly, that was golden, overshot even to 233, 235.50. I know Tim is long this one and he's been selling calls, so he's protected. He has a baseline position in this. It's one of his core holdings. So we talk about Visa a lot. We talk about American Express because that's my trade. I like American Express better. So long story short, that's a big expansion bar to the downside. It is sitting on 10-week. It very likely can break it because the market is weak sauce, but ultimately this is one that I will go and take for the long term. I happen to like American Express, but consumer sentiment right now is in the pits, and we have a lot of problems in that space. So would not surprise me if we come back and churn all the way down to 170. Pelletier is absolutely, to me, the whole space is garbage. So I'm a big believer that SPACs, I did a webinar in November and then another one in January, and the weight of issuance was just going to be an anchor around its neck. So I actually like to chart everything. This broke. This is the channel. We did a lot of channel surfing. Then when we broke, where is support? There is none. I do a fib on it. Okay, we had a little bit of support at 1880. We just continue to fail. So to me, this whole space is still in distribution. There's nothing safe about SPACs. There's nothing safe about pot stocks. There's no political intervention either with this group. EVs, I mean, obviously, I don't trust the EV plays. I don't trust the Chinese ADRs. They've been protracted downtrends. So I don't have anything positive to say about Pelletier or Lucid. In fact, I think, and this is already a short into 9. We're having a one-day wonder. That's about it. And Lucid can be a great single stock gamma option play when options come in and you have this kind of, excitement. But as you can also tell, it busted. This was price target 24.70, and now we are giving that up. There's just not a lot of safety here. There's just not a lot of safety. So 24.70 is really the last domain before we break down and take out some very significant lows. So I am not bullish any of those. Sorry. I don't have a price target in Square. I said that this was support and we broke it. And we have been in a continued downtrend and there's absolutely no buying. Buyers have just stepped away. So did we bounce at 83 perfectly, which happens to be one price target. Another one is 70. We did. Right into resistance, pivot, 89. And then we roll back over. The next time we break 83, then I see 70. Do you see that little red line down here? I know it's tough, but they announce after the close, I've got no edge, none. All I know is that PayPal, I still have lower, 82. See that bounce? Rejected. I still see 82. I still see Square lower. Would not be surprised if we go all 70. I still have 70. Silver, gold, all of those, time frame matters. Time frame matters. So we had a little bounce at 83. Next break lower. Pelletier, we had a very strong bounce. Hold on. I did that one, right? Yeah. Let's see, 1142. Let me put it this way. I'm wrong if we get back above 1142. More likely, we get rejected at 1142 and we roll back over to my $9 price target. Like that. See how that bounced into resistance? And now we're getting rejected. I have a $90 price target for BABA. I'm disappointed with healthcare stocks as well. So we basically had this fabulous fake, well, not, it was a breakout, but it ended up being fake breakout, fast failure. We overshot to the 50. And I know you've heard this if you've been in the room the past few hours. I'm doing a lot of education, hopefully, on how I technically trade using moving averages and trend lines and blah, blah, blah. So everyone has their own kind of way that they interpret the market. You have your own, I have mine, but I understand my language really, really well. My experience is we bounce the first time, we break the second time. And I've shown that pretty much across the board in all kinds of setups, whatever the stock or ETF. And if we're sitting on it the second time, likely we're going to roll over, like that example in ACN that we just talked about on, you know, at the open on Tuesday. I said, oh, that's actually a nice short. So the point is, I'm still that, I'm going to go that basic level. I'm going to look at the ETF of XLV and say, all right, we are definitely going to be at risk here. Let's see. And I'm going to go through and do a little bit of, okay, we're on support. We've been here before a few times. We bounced, we break. So we break 125.5. We're going to come back down here to that 100 week. And the 100 week happens to be, let's call it 120. So Anthem is going to be part of it. Has not rolled over. Oh my God, that's pretty special. It actually hasn't rolled over. The risk is we don't stay above 440 and chop sideways. The risk is that we roll over and head back down to 398, which is pretty much where we broke out last time, right? And given that XLV is kind of shaky and medical devices is a little bit shaky, UNH is basically already down to breakout, right? So I'm going to say healthcare plans, although they are still doing better than most, don't take it for granted. EPAM was a Russian play, Ukraine play. Yeah, I didn't have any idea about that one. Yandex is Russia, RSX is Russia. That flips into 378, then we'll see. Pfizer, gorgeous, just let it fall into 44. I still see 44. Devon, oh, Devon. Depends on your time frame. Ugh. So this is still in trend. I know it's been a long holding. Oxy, Schlumberger, Exxon, Chevron, gorgeous earnings reports too, but it's in distribution. So right now we have that red big bearish bar 2 days ago, and we're going to have some softening in this space. I really believe all of them are going to come down to the mean and test it again. Now we've broken through it and then gotten defended, broken through it and then gotten defended, but we still have to go and test it. So I still think we're going to come back down into this 49.90, and it wouldn't surprise me if we take it out. There's too much in my intermarket that says we're done. 70 is the low risk and low risk entry short. So if we turn around here a little bit, right, we're now into a few weeks of this big, huge green to red call the other day, because again, this is just resistance and it's monthly. It's having a really dang hard time. Market's weak. Now we're breaking 67 on cue. We're heading back down to the 10-week. I would say we overshoot. So all of your long trend plays that we've been in, I don't care if it's, again, Devon, Monroe, and I put all of these with price targets, when to short, right? And with price targets in the sector rotation channel. So we still need to take out, for Exxon, for example, 76, that's monthly resistance, and it's where we broke out. So we're going to retest this and come back in. I would not be surprised if we come all the way back down to 71 and change. Definitely 72. Zoom, I have 107. Protracted long duration swing. It's ridiculous. Literally did a video here that we would never, ever in the history of time ever see a better earnings report than this one. It was the top. So this is really technically just continued downtrend. Whether it was the channel or the 100 into resistance, there's the 10-week again, totally rejected. Boom, right down to support. Just could not get any oomph. And it continued to stay oversold. Love these, right? So this is just a continued rollover and then flatline. And as it stays oversold, it just continues to sell under the surface. There's nothing there to say, buy me. There's no bid. And you can do technical, whatever you want. Here's the 21-day. Traders, swing traders love the 21-day. Well, check that out. We got right up into the 21-day and then promptly rejected. Look at that. We haven't even tagged the 21-day until most recently when everyone was like, oh, let's go long tech. I'm like, why? That's not the level you want to trade against. It's the 10-week. You want to get above the 10-week. And there's nothing here that says bullish. Yes, one-day wonder. It doesn't do it for me. It's just not enough. ARC, protracted downtrend into resistance, still hasn't even tagged the 10-week. Did we hit 60? Absolutely. Are we having a big bounce into resistance? Yep. Still doesn't do it for me. It's broken. Right now, the weakness that I'm seeing is in some of these larger, trend plays, whether it be Alcoa, yikes. DBA, yikes. We get some breaking levels here in 47.85 and XME. There's a lot of folks holding out in things. So careful on that. We're definitely having profit taking. Oh, I haven't even, yeah, let me do Bitcoin, Bitcoin, Ethereum, that kind of stuff. I don't like these, but I'll show you the actual chart. So let's do that. I can type. Yeah, no, there's nothing here. We're just chopping about. Absolutely. Alco is getting crushed right now. Biden team will hold off on Russia sanctions, and that is hitting aluminum. Biden team will hold off on Russia sanctions. Russia ready to negotiate with Ukraine. Yeah, so this is a situation where, for me anyway, we have a reversion to the mean in play, right where we broke out. So whether selling calls against it, if you want to still stay long this trend or add some puts for protection, but that was definitely the foreboding candle, bearish engulfing, inside dump. So we got a lot of profit taking in spaces that normally were very, very bullish because of inflation, whether it be XLE, XOM, XME, you get the idea. We're definitely having some profit taking. Reversion to the mean. All right, US oil-led reserve release could be 70 million barrels. All right. We've had some very large bounces in momentum trades, but we're still busted. All right, so here's an example. Take a look. This is the 50-week up here. We bounced into resistance perfectly with that trend line, and then we broke the 50 right down to the 100. We overshot the 100. We bounced into the 50, and then we broke the 100 again. Now we've made a lower low. Here's the 200. So honestly, any bounce for me into as high as 158 is going to be a very nice reshort, right back down to the 200. In the meantime, we have FANG stocks. Petering out, sitting there on support, this 327 intraday. Sideways in NYSE, sideways in accumulation. Yep, nothing there. Oops, sorry, hold on. And we stopped going down this morning. No, we haven't even stopped yet. All right, so the rate of descent has slowed. So we're not falling very fast. We have actually stopped falling. That's about it. But we're still flatlined, right? So there's nothing here. Still says buyers have not stepped up to really bring the market higher. It's very much momentum oversold growth plays popping up. Namita, I'm so sorry. Yeah, TTD, just not a good look for me. And TDOC, it's a same as so many others, right? They just kind of rolled over. Hasn't made a higher high intraday. Still in a protracted downtrend. Let me see if I find any bottom on this whatsoever. Not really. Distance. Yeah, no, I unfortunately still don't see solid support. Yeah, I'm not seeing anything on a weekly that says it's safe yet at all. Oops, I don't want to do that one. That's a gap down, by the way. So in the way that I've hopefully kind of shown that we can have some solid bounces into resistance, but ultimately this is a gap fill. See that pink line in SPY? Not only is it a gap fill on a weekly, but it's also the 100 week. So for me, it's level by level by level. We break the 10 week, then we break the 21 week, that teal, then we break the 30 week, that's the dotted white, then we break the 50 week. We always bounce at the 50, member. Then we go down and we absolutely tag the 100 week. And if that one breaks, we absolutely go down and tag the 200 week. It's that simple. It takes time though. We could have a strong bounce after Biden comes out at 130. It still would not break my thesis that we're going to bounce potentially into resistance and then roll over again. I'm looking for something, but we're oh, there it is. All right, that's what you're talking about. All right, so I had forgotten about this one. So basically, this is just a technical kind of level of saying we're going to go down and test that 100 week. There we go. All right, so now I know what you're talking about. So yeah, I did this for clients, and this is basically, I don't remember who said we could see 2,500, but he always is bearish. All right, I was waiting for a literal internal analysis and all that other stuff that said, no, we're gonna roll over now. So went to clients on whatever it was, November 16th. I showed it to you earlier. That's it. I think the market's going to turn. We're going to move south. We're going to hit 4,400. We're going to have a year of underperformance in both stocks and bonds. I went on Stock Charts TV and did the same thing. We're going to have a year of underperformance in both stocks and bonds. So this was one level that I gave, which is basically, you know, you're kind of sitting, if I was on the weekly, you can see that we're going to come back down, and here's the 100 week. It's basically 4,000. Not all in one straight line typically. So, but that's absolutely where I think we're going. Strongly believe we're going. So then it's kind of level by level. If we've already removed Nasdaq 20% drawdown and all 2021 gains, it's not unreasonable to think that we could actually remove all of 2020 gains as well. But I don't think that'll happen until the year 2023. I don't think it's going to happen this year. I think we come down to 4,000, we bounce into 4,400. I'm a big buyer once we come down to 4,000. 3,800, I'm an even bigger buyer. I do not think we're going to just waterfall cascade all the way back down to, let's say, you know, pre-COVID highs. I absolutely think we're going to go there now because the trend has turned. The trend is broken. And there's a lot of meat left on the bone with semis. There's a lot of meat left on the bone with a whole bunch of companies. But the point is, those are what I send out and clients get. So how do we know it's a bounce that's not just an extreme oversold short covering rally, and how do we go before reversing for real? I want to see my intermarket tell me it's safe. So this is what I do. This is what I do all the live long day. I just go through all of my intermarket tells to say, okay, this is definitely risk off. We're going to have some volatility emerge in a big way. Okay, this was posted days ago. Point is, that's my job, is to say, when is it safe and when is it, you know, to go long, and when is it safe to go short, and when to press shorts, and when I don't know. So, but this is definitely not something that I am seeing as a low risk entry long. I think SPY down at 4,000, even an overshoot to 3,800 is going to be a much stronger tell. So for example, this is a stacked VIX, and this is SVXY, which is a 3-month VIX. This is the spiders, and this is gold. So I posted this on the 14th. Happy Valentine's Day. Long, short, long, and it's working. I'm going to wait until these levels get tagged and then actually show some support. Can I tell you? We're not even there yet. Except for gold. It hit 182, as I mentioned, right? So gold already hit. Boom, look at that. Perfect. And then we had profit taking. Now it's got to kind of digest. That was an outsized move. Anything above 174 was bullish. We have held 164. Anything below 164 in GLD is major league bearish. So now what I have to make sure is that this is not going to turn tail and completely come crashing down through 174, because if it does, price target's going to be 164, then 154. So big picture, I'm looking at weeklies. I'm not doing the chase time frames. On a shorter duration, you can see the chase time frame. We tagged a price target, profit taking. We broke. We came all the way back down to 179.12, and I said that this morning. And here we sit. Now we're digesting. This is different. These are chases. This is a swing into price target, and this is a trend. Anything above 174 is bullish. Does that make sense? So I will have a better feel once we tag some levels in VIX. We're kind of sort of there, not really. Oh, SVXY. Yeah, let me show you. SVXY is a short-term futures VIX. Another way that I can go and kind of do this, why am I long short kind of thing. This is pre-COVID. That's a gap fill down on February 24th. Happy anniversary, market. Right in the kisser. All right. We couldn't get above. We couldn't get above. So when this rolls over, it rolls over with the market. When this moves higher, it's bullish with the market. We took on a weekly a lower high. We pierced Bollinger Band and Keltner channel into resistance. What's that? 10 week. What's that? 21 week. Same thing. I don't care if it's a stock, an ETF, a commodity, a bond. I still use the same moving averages, week, day, hour. So we rolled over, and I'm warned, bearish engulfing. That means higher VIX. And now look at VIX. What's that? Bullish engulfing. Bullish engulfing on a weekly is very, very bullish. The probability of VIX moving higher is very, very strong. We did. Now we tagged a price target and we're softening. But this is my price target. We're not there yet. Does that make sense? I do not know this one at all. Okay, it's minerals. It's very thin. So I personally would never trade this because it has no options. It looks fine. I guess you're a trend trader. It's got a nice shape. It's firmly above the 10 week. I should probably know what this is, but I absolutely have no idea. So this is still in trend, if that helps. I'm sorry, I'm just seeing this now. All I have is it broke out and it's obviously above 16. Very, very thin. Base metal royalty company. Okay. Very, very thin. We're just hanging out here. 327, just hanging out. Literally. Risk parity is another one that I use, which is not usual suspect. It's basically that 60-40 split. There's an ETF for that. I trade this in the same way, not trade, excuse me. I analyze this as a way to tell how bonds are going to behave. So this has been weak with bonds, obviously. That's kind of how that works. All right, so diamonds, for example, right, they bounced the 50, got to resistance and rolled over. Here's the 100, hasn't tagged yet. So you know how I feel about that, right? It will. Small caps already broke the 50, bounced into resistance, failed miserably into the 100, blew through it, bounced into resistance again, and now we're right back to where we started. What's the next price target for small caps? The 200. Takes time. SPY, look how high that is above the 200, excuse me, above the 100. We have so much more room, so much more meat on the bone. Qs already at the 100. Baba, beautiful, beautiful, right? Look at that bounce, perfectly into trend line and the 3-day, like there's a 3-day. See this yellow? And it's rolling over. So I'm still looking for some levels here in volatility. We're not there. Let me bring that chart up, actually. Let me just bring that up. Stacked VIX. But we definitely have a pause. So here's that level, that one I was showing you earlier. This indicates backwardation. Now, are we going to have a garden variety or are we going to have a bigger move? We already know, everyone sees the head and shoulders. This is the VIX 3-month. We're already up to that trend line. Sorry, this is annoying. We're already up to my resistance level. Would not surprise me to pull back. We could have a sizable pullback and then shoot higher, but this is definitely worrisome, that whole shape. That's not what I was going to show you. What I was going to show you was that level we talked about. What the heck is it? What the heck is it? It's noontime, so it's quiet. Gosh almighty, what the heck is it? Hold on. Huh. Oh, there we are. Okay, there we go. Sorry, I have a lot of charts. I have a lot of intermarket charts. This is the trouble. This is why I go over them at the end of the day. But we're not even there yet. Remember that chart I just showed you from a few weeks ago? That's what I sent clients. Get out of the pool. Literally was the headline of my post. All right, so here's 400 in SPY, same thing, 4,000. Gold had already pushed up and VIX had room to go. So here we are now. We're not quite where I think we need to be to have some solid stabilization. Does that make sense? All right. $327 is the level it needs to break. And then you can see this pivot underneath 327. You can see my support line here. Yeah. So we need to break that literally. Let's see. I got the 7 and 17, 326. Now we're just hanging out here. We're just hanging out here. Literally 326.64 is what we need to break next to reshort. Otherwise, They're waiting for Biden at 1:30. They're waiting for the afternoon, whether we get margin calls or value shoppers to be determined. Right now, big picture, not safe, but we definitely are in a holding pattern until we hear more from Biden. And we have also dueling Fed heads. So we had Bostic out saying, no change, no change. And then we have Mester saying Ukraine events could influence the pace of removal of accommodation. It's going to be a tricky few days into that FOMC meeting. But ultimately, this is all, credit markets are going to kind of decide our fate. And I've posted this before. This is a little bit more macro, and I don't care if it's not your speed. You got to pay attention to what the credit markets are doing. And right now, there is a very, very ominous look for not only the rollover, which I've been talking about since November, but now credit markets are starting to get a little worried. So this is what Craig focuses on in our macro advisor channel. I'm much more focused on volatility, sector rotation, and then the underlying stocks, commodities, currencies, ETFs, and setting them up. Also doing that custom engagement with clients when they say, what about this? What about that? What are the levels? Tracking option flow, tracking news flow. But this is something it's just more support, if you will, that we do not have a bottom yet. Amazon. Nice monthly support, well, actually weekly, but I'm sure it would be monthly as well. When I put this in red, for me, I'm looking at some support and potential problems. So for example, we're sitting right here on that red line. Makes it pretty easy. We break it, we're going to go down and retag. So ultimately, it's almost like channel surfing for me. This got bowled up because of earnings and then rejected firmly at the 10-week. And then it broke the 100, and now it's sitting on this weekly support, right? We got overextended and then we bounced right back in. So big picture, I still see this level as very key for a rollover short into 2,500. Right now, intraday, that's your level, 28.85, basically. We stay above, we can continue to 3,000. We break, we're going to retest the lows. More likely we go sideways because we had such a dramatic move right now that no one knows what to do. Except wait to hear if Biden is actually going to do anything. Last time he spoke, the sanctions were so light that the market rallied. So that's a little bit too much too soon. In other words, we've already moved the entirety of the expected move for today. And speaking of which, remember that 1.7 is the key. In other words, volatility gets very busy when we get beyond 1.7 on a drawdown in SPY. So we literally tagged and bounced. We're softening into Biden. But when we take out that 1.7 again, that's when volatility explodes. And that's also when Apple gets very busy to the downside again. So Apple causes VIX to move higher, and SPX beyond a 1.7% move intraday also causes VIX to move higher. All right, intraday, I just like to check every once in a while. Yeah, just weak. Just not a lot of buyers stepping up. It is what it is. Yeah, and they're still selling under the surface. That's my tell. That's my tell along with everything else, right? There's no lack of selling under the surface. Just keep that in mind. That creates an air pocket of risk. You want to see this stabilized. You want to see this moving higher. This is selling under the surface. Yeah, AMD, same thing. Hit the 50-week, bounced into resistance. Now we're just waiting for this basically 107 to give up. Look at that perfect tag right into the channel. So 111.71, and now it's starting to fade. It hasn't fallen apart. Nothing has. But the point is, when 107 breaks, this will tag 99 and change, which is a prior low. And then it will tag 100. That's a magnet. In the meantime, that's channel surfing. And it's also the 200-day, which is just obnoxious. Because the 200-day is going to act as resistance. Very tough to get above it and stay above it. And there's now major bounce off of Bollinger Band, bullish engulfing off the 100. Nice, by the way, short. If it breaks, was a nice short. It's obviously getting some squeeze action off of the 100 week. Below the 200. So we bounced into it. It came back down. Yeah, intraday, it's this 553. If we break that, it comes back down. No, I take that back. I had it on the wrong channel. Yep, 544 and change. We break that, it comes back down. Sorry. Three, 2, 3, John? I'm confused. Are you talking about what? Yeah, I'm not sure what the question is. Sorry. If we break again 226.64, that's the rollover, the trigger for the next short. Right now we're bouncing into resistance still. And 332. Yeah, not 323, 332 would be that next price target, right? That is resistance. The 3-day. All right, so we already had that sizable bounce in Tesla. It and everything else is just sitting there. So a trigger long from here would be this 762. If we can get back above it, we can head up to 786. Otherwise, this is the channel. We haven't rolled over. We got to wait until we get some kind of news here. We're just sitting here. I see some calls coming in of size. I think the 340s, the 338s would be the logical. If we're going to get some bullish move post Biden, it's going to go right back into this 338. That was our breakdown level. So basically yesterday I posted for clients a break of 338 is continued short. So guess what? A bounce back into 338 wouldn't surprise on some good news. Wow, nice move. So LNG digesting, but still a really, really nice trend. Tell, I don't know anything about it because it's lower, it's a low priced stock. I think it is better if you're bullish this. I'm not, again, familiar with this one at all. I would say it's already moved pretty strongly into the 200-day, almost there. If it can, yeah, I personally don't like low price stocks at all. And when I do it, like a GameStop in 2020, it's buy the stock. And then as it grows up a little bit, then go for the options. This is extremely expensive IV for a low priced play. And it needs to get and stay above 341. So this is uncharted territory for me. I've never even looked at this one before. Yeah. So if it can get above 341, it'll likely move into 4, but then probably gets rejected again. Intuit's also on 100. Yeah, this has been one of Tim's absolute best trend trades. Again, gorgeous continuation. Then it got into distribution. Then it broke the 10-week, rallied into the Keltner channel, rejected very promptly, came down to the 50-week, bounced into resistance. This is a recording. Like I'm going to show you this over and over and over again. This happens repeatedly in a bear market. And then it took out the 50 and it hit the 100. Now it's bouncing. So this has a lot of work to recover to be back in trend. This would literally have to close above 550 for a solid week for me to be even interested. So, but he sold calls on this and bought puts expecting this, long-term hold to trade around a core position. That's a good way to do it. We're just stabilizing. We're trying to digest a huge move. As Biden gets closer to speaking, the market is definitely, look at it, the first green signal I have had. They're buying calls in some of these oversold plays. I would like to really see it. Not bad for a lotto play for 338 to retest. Oh, space is a no touch for me. Yeah. When the Richard Branson sold all of his shares, it's like a chamath. All these SPAC plays are just pump and dump. I don't see any purpose whatsoever. Even yesterday, I had a nice little post earnings bump, completely got sold. Yeah, I'm definitely, those are protracted downtrends of no interest. I'm just waiting for AMC and GameStop to also give up their heartbeat. we're in waiting mode until we get some kind of news. Enterprise has broken back inside, unfortunately. So it had a nice look and it has completely fallen back inside. So no longer a safe trend. It had been sideways, very bearish, engulfing. Now it's broken below 23.40. Here's the 200. Wouldn't necessarily short in the hole, but not a good look. Don't know the lower priced ones. Yeah, I'm terrible about that. I don't follow the low priced plays because I'm an options trader. So for me, I'm looking for very liquid. I don't want to make a market. I don't want to buy extremely expensive IV either. So palladium. I'll show you palladium. Hold on one second. Thank you. I didn't see that. So where am I getting the news? Hold on one second. Here, we have a feed. So I'm following this while I'm answering questions and managing setups, etc. Ooh, big calls came in for the Qs, March 18th, 345 strike. Yeah, so that's what that's just seeing if there's anything really, really important. Lots and lots and lots is important, but my point is specifically in market moving, we've kind of, we hit a pause. Oh, so sorry, I didn't see your question about Apple filling the gap. I'm pretty sure I said yes. I still think this is a swing short, but filling the gap, high probability. Yep. So CRM, yeah, I don't think the clients in the room this had a price target for me of 195.72. $196, basically. The fact that we have, that's pre-COVID. So fabulous short, same thing. 50-week tag into resistance, breaks to the 100-week, minuscule sideways action, couldn't get out of bed, really, right down to the 200. I think this is going to stay here for a few weeks before we get a real good feeling of continuation short, because it has a strong relationship with the 200-week. So If we get a bounce, I don't mean an intraday bounce like we're getting. This is stunning, right? This is what's happening on a lot of stuff that's oversold into some key moving averages. I would like that for a bounce. If we get some follow through that is bullish for more than a few hours, oh, yeah, then I can see this being a low risk entry long, at least for a few dollars, like maybe 210. So I do like bounces at the 200 week. Doesn't mean they're going to stay. Yes, still can see the 200 week fell apart. Right? 200 week fell apart. 200 week fell apart, and then it had some funky stuff going on. But anyway, look at this rollover. Rithika is short this at the 55, at the 100. Gorgeous short. This is needing a little push. 34, breaks 34, and it really came close, didn't it? Oh yeah, breaks 34, even though it says 35 and a half here. I think that's going to be a nice continuation short. So there are plays that have a nice relationship with the 200. Yeah, Apple, they are trying to keep the market going higher. They're going to buy calls in Apple. It's the easiest thing in the world to do. It's tight spreads. Doesn't mean I trust it. Nope. We have Etsy after hours. There's that 200 again, trying to hold on. We have ZS after hours. I think ZS disappoints, but that's me. And we have Coin after hours. I think Coin also disappoints. Palo Alto, very strong earnings the other day. Oops, OLED. Also coming up, very nice look. I think you sold puts on this one. A rare look, because it's been, again, rolling over. There's a 200. See what happened to the 200? It bounced into resistance, then it failed again. So just know your time frames, I guess is what I'm trying to say. CRM, it's bouncing, but maybe up to 210. All right, let's see what the Bitcoin is. The Bitcoin, where is it? While we're waiting for Biden, I want to just go over a few more questions and Bitcoin. There it is. No. All right, so we still have not taken out 33,000, but that's definitely 3250, 32,500 or 33,000 is the level to break to really test support. So we've already been here before, right? 28, 8,000, 29, 9,000. I mean, this has just been an area of support in the past. So it's a magnet to retest. Let's call it 30, 30K. Has a little bit of trend line support here around 32,500, but it has been very, very weak. And I'm still looking at that 30,000 as an area for price target on the downside. And then a break. When and if we break this 30,000, we have a very, very large channel down to 20,000. Originally, this looked like a head and shoulders. but it got really corrupted here. It's very messy, so it's not a clean head and shoulders. See this left shoulder, right, excuse me, head, and then kind of like a right shoulder that then rallied into resistance. So this is the 20,000 mark that I was just showing you. Basically, you can see it as well. It's a 200. And we've been there, right? March of 2020. So it's a little bit easier to see here, but it has some levels it has to break to get there. All right, and Ethereum, same thing. It's been rolling over. Could not get up and through the 200. So it traded below. This is the 200. Traded below. Looked like it might have a left shoulder, a head, and a right shoulder, but it couldn't hold it. Obviously, it took out support, and it's traded below a key lever with waning momentum, and it looks like a continued short. So I'm not so excited about kicking a dead horse, but it's definitely risk off still. Yeah, that's the 44 for Pfizer. It's been in there for a few weeks. Actually, since about here, we couldn't get above this trend line. So this just continues to fall. Simon, I'm surprised that MP hasn't done better. Yep. I mean, it's okay. It's a rare earth play, but it has not done better. I'm a little surprised. It hasn't fallen apart. It's still fine. All right. As you are waiting, I am waiting for Biden to come to the podium. Let me just take a look. I might go get a tea. We have nothing going on as it relates to expression of bullishness in cumulative action, in advanced decline, or in volume. Nothing. So better be something really, really outstanding, honestly, to turn this ship around. Datadog and LRCX. Oh, I think we talked about this one. Yeah, to me, I think there's a lot of risk in semis because it's the one sector that really hasn't been taken out. It's been in distribution for the past year, like LRCX. Did tag some price targets, then got really, really sideways, very large expansion bar. Here's the 50 overshot, and it has just been really digesting sideways, but that's not a good look, right? So we needed to move back above 600. Unfortunately, this is, I believe, the next shoe to drop is in semis. It's been holding out with mega cap, and I've gone over that in the sector rotation review. It's one of my worries early on that we could not get above. This is on a weekly. This is the semi index. We were absolutely forming kind of like a cradle rotation. We absolutely hit my price target, which was the 50 week. We bounced into resistance, and now we're through the 50 week. I think there's still meat on the bone lower. I really do. So this has been playing out. And if you look on a monthly, you can also see this distribution in a Morningstar reversal. Stunning. I mean, all these price targets have hit already. This stuff has been posted for months. So it's just, you got to be a little bit more patient when you're swing trading. But to me, this just shows me that there's more risk for semis rolling over because they haven't yet. And we had so many others that did. IPO, right? That's the 200, by the way, take it out. Cloud, I could go on and on. Internet, social media, biotech, right? You can see this kind of protracted rollover. Are we getting into some support areas? 60 has been my price target for ARC. It is the pre-COVID high before the washout. We're there. Should we bounce? Yeah, I don't mean just intraday, but we're not safe yet. A lot of this stuff has completely come all the way back down. So yeah, all right, so they're put writing at 10. So they're taking make puts and they're selling those, FYI. Expecting a bounce. Okay, I'm watching the news also at the same time. We got a lot of inside candles right now. We got to kind of wait a little bit. I think Datadog comes down. I know earnings aren't until May, but there are a whole bunch of plays that I would love for them to prove me wrong. But right now, Datadog is way messy. It's still like 33.5, which is high for valuation. I think that this rejection at 180 was telling. So if it can get back above that trend line, that would be very nice. It was a nice bullish engulfing on a very key level. It was gorgeous, gorgeous swing into trend line. Had an overshot of 180. It got rejected. It came back in. And now it looks like it wants to break that 10-week and roll over. So I think we'll have a little bit more clarity. For example, ZS reporting after the close. I'm very curious to see if this one sells off hard. Solid bounce intraday. I hear you, but I don't trust it. Okay, Biden to speak soon. Boy, these low priced ones are just taking off, aren't they? All of these are still trending higher. All right. Sorry, I wanted to check something before he comes in. So XLE, XOM for clients, we know we're already short that. Waiting to see what we're going to get in the tech space. Gold already made a full channel retracement. Still waiting. Yep. Bonds still hanging out above this 137.62, but a lot of work there. Because this TNX is 1.94 is just critical, right? We continue to fade lower. We press the oil and gas sector lower. Yeah, I don't trust it. Like I said, crowd and ZS, I do not trust. ZS reports after, so I'm going to wait. All we did was run into resistance. Now we're waiting for Biden. So let me do this. I'm going to be right back. I want to see. Nope, nothing. We just literally pancaked. Okay. Still no energy. Did I not answer OSTK while I'm waiting for Biden too? I want to get a glass of water. I usually take a solid break and eat too, but anyway, it's way too eventful. First he was going to talk at noon and then 1:30, so I don't want to go anywhere. All right, so I have all kinds of things that I use. It's my intermarket is I have not even touched upon all the stuff that I do in intermarket world. It's stupid. We're having a bounce into resistance. I want to see if we can get some follow through for more than a morning, right? That's number one. I still see absolutely no energy under the surface, right? Reflexive short covering bounces are not the same thing as trend reversals. So for right now, I'm going to hold out until I can get a little bit more traction here. I've called out what I can see for some potential strong bounces, right? So we talked about Apple, into the gap, CRM off the 100. There's all kinds of intraday bounces. That's not the thing that I'm most interested in, right? I want to caution that we still have elevated volatility and it's trending higher. We still have broken markets from mega cap to speculative Bitcoin. I don't care what. So waiting for Biden to speak to see if we get that, what do you call it? That bounce that we had last week. John L., I'm not going to repeat that out loud, okay? Socks. Let me show you that while we're waiting. Meaning semis. Hold on. Yeah, NVIDIA also into the gap, the highest probability. Let me get that. Aw, thank you so much. All right, intermarket. So for example, I posted this earlier, right? This is for clients, what I'm showing you. And again, apologies, I can't get you. Where the heck is this? Okay, big picture. While we're waiting for Biden. Monthly resistance meets head and shoulders at monthly resistance in a trend line channel that is going all the way back to 2009. This is compact. This is Nasdaq and SPX ratio. Okay, so I saw this early and said, okay, let's go short. We've broken some key levels. We are bouncing into resistance this morning, but I still see big picture, lots and lots of meat. Then I go over with clients, well, where's the meat? So it is very dependent. whether it's the Chinese ADRs that I'm still short, or it's the mid-cap tech plays with the high valuations. I don't bother with the SPACs. I barely bother with the EV plays. I definitely have no interest in pot stocks. They've just been in a protracted downtrend. There's no reason, policy or otherwise, to get excited in ESG or marijuana legalization yet. So for me, it's not of interest. I will always play options, the most liquid stuff. So the Netflix, the Nvidia, the Apple, the Microsoft, the usual momentum chases. I am absolutely a girl that looks at overbought and oversold, but I use confirmation with my intermarket. So for example, this particular stack chart that I just showed, I think, yeah, here, for example, this is SOX, okay? You just asked about SOXX. So we are not even close to being oversold. And what I mean by that is, if you see IPOs, right, started, and I showed you this before and after, because I do this every quarter for clients because these are sector rotation calls. Anyway, we started to fade and roll over, right, with that 200. This is the IPO plays. They're still not even at pre-COVID highs. The fintech plays, however, are. I can't show you the social because it's not on this chart, but the social plays are the Twitter, the Snap, the pins. Okay, but these are fabulous. When they break trend, where do I think they're going? Just like I showed you with the rate spikes, right? Short to long end, where do I think they're going? All right, it's always a dance though. We're always going to have some oversold bounces, no question, but the trend is busted. So I'm still looking and shopping. For example, IGV is heavily weighted with Microsoft. Heavily weighted with Microsoft. SOX is heavily weighted with Taiwan Semiconductor, TSM. Big. So when I was asked about TSM, and I gave a level for that short, and then another level for that short, and it looks like massive distribution, like it's going to start rolling over in a bigger way. Maybe you're trading it like a macro thinker, China-Taiwan escalation coming. I look at it from that plus sector rotation. Semis have so much meat left in them to short. And what's the biggest within IGV or within SOX? It's going to be TSM. CRM is doing well. Okay, it's going to be TSM, for example, 127. Anything below 127, we obviously had a fake breakout and a fast failure. At the time, it really did. It was a great long into 142.20, then it got rejected. Boom. So now it's sitting on, excuse me, it's sitting on support. Where have we seen this kind of chart before? NYSE was in solid distribution for a long time before it finally rolled over, or small caps for that matter. I know it's really messy, but humor me, right? Lots and lots of money just kind of hung out here. Fake breakout, fast failure. Here's the 50. Okay, I keep going over this. 50, then 100, then 200. So TSM, yeah, that. So can we have a bounce here? Sure. We hit 200. We did a little slinky. We overshot to the downside. Would not surprise me if we have a little reflexive bounce back into the Bollinger Band and then we get rejected. But to me, this is busted. It is below the 50. We're going to have a little reflexive bounce, not a surprise. And then we break down to the 100. We break down to the 200. That would be much more in keeping with the pattern, right? So the same thing with the semis. Actually, you know what? Hold on one second. Let me put this on a monthly, see what it looks like. Oh yeah, nice. So this is TSM on a monthly, but I'm just kind of, for me, focused on SMH because it's a little bit more liquid and easier to play. That's a Morningstar reversal. Here's the 10. We're in trend above the 10. We're out of trend below the 10. This only pierced. It didn't close below, but that was a high probability short because of that pattern. That's a trend reversal pattern. We bounced to half of that candle, which was also something I said because of this level. Boom, rejected. Stay short. So for me, we're now on this no man's land where on a monthly, we could go sideways for another month before we roll over. It's going to frustrate a lot. We could literally just hang out here and go all the way back up to 270 and then roll over. But this is different time frames. So this morning, we're bouncing back into resistance. But on the weekly, that is not a good look. Okay, finally we have Biden speaking. We have crude rocketing to 100, I think 102. No. Okay, hold on. Hold on, be right back. Oh, sorry. Okay, so what do we have here? I'm still looking for that channel long into resistance, and we're not quite there yet. Biden out. Biden is out speaking, I should say. And it's not even updated yet. Okay, so it's a little bit new. I was going to say it might be easier to follow along. You got your own sources, though, I'm sure. Biden now already patting the intelligence community and the fact that they warned for weeks it was going to happen. Still not seeing anything here. Okay, hold on, let me get out of this. There we go. All right, so as he speaks, the market continues to feel a little bit more for whatever reason. We haven't quite made it into resistance yet. I still don't see much energy. Dang it. There we go. We're a long way from being safe, but I want to know what they're going to do about it. That was a Bloomberg article, by the way. The aluminum, Alcoa dumped already. Bearish engulfing, already set up for a rollover to the 21-day. But the article was actually Bloomberg that you were asking about the source of that. Okay. How are defense trades doing? Biden says we'll limit Russia's ability to do business in dollars and yen. Locking more banks, Russian banks. There isn't anything new I think we're going to learn from this, honestly. Apple wants to fill that gap. It's so easy. It's 160. Come on, one more dollar. CRM, boom. I like that support bounce. Like the Apple gap fill bounce. Tesla to 786 kind of bounce, which would base 786 would be the 3-day. Nope, 790. 790. It's already moved up. These are just bounces into resistance. I am not putting in a bottom here. No way, no how. Do you remember the article I did, which was basically let them make a bottom? Let them, just let it fall. Oh, where'd it go? Sorry, this one. Timing tops and bottoms. Are we at one now? Twitter wars aside, right? I was very, very convinced we were going to revisit and take out the January 24th lows. But the point is, let them make a bottom. Let it just fall right into that support. Let them create a bottom fishing reversal. And then we can absolutely come in a much, much better time frame for a continuation versus this kind of action, which is bullish intraday. Very nice, but you know how I feel. I have been short into a quarterly level. We're bouncing into probably 792. Just gave that 3, which is basically it's moving up as well. Every little push here is starting to round that. So it's going to be basically 792 pretty soon. Biden says US forces will not fight in Ukraine. But they will restrict their ability to conduct business in dollars and yen. Russian forces have shot down 4 Ukrainian army planes, 4 drones, and 1 helicopter, they claim. We're there. Gap fill in progress. Oh, we overshot. We're right here. 333. All right, so that's a gorgeous intraday continuation play, right? Now think about the risk into the weekend. We haven't started yet. It's not even 2 o'clock. Could have some margin calls end of the day. I don't really kind of base anything on that, honestly. I don't know. But I do know psychology of traders typically chase an oversold bounce, cover shorts, and then de-risk into the weekend. It's pretty usual. So 338 would be my outsized bounce target. Intraday, we're almost there, right? Tomorrow, we could see that 338 and then rejection. It will be very, very interesting how we close. And I'm wrong if on the weekly we get above 338 on a close, then we're going to head back up to 355. But right now, it's just a bounce into resistance. Really nice. And that's it. Solid bounce into resistance, and then we stop. That's my baseline bet. Oh, he's talking about oil and gas companies, putting more pressure in that space. We're not going to talk politics here, just price levels. All right, so RSX, we're getting some, the sanctions, once again, deemed as weak, but more importantly, the SWIFT payment ability is going to be debated in the macro circles for a while. And then long story short, troops not being sent abroad, market likes that. We have VIX, let's go over that. Broke the 3440 on its way to 31. Exactly. Really, really nice. ES filled the gap already. It's morning gap at like what, 42.16. And of course, they're talking about releasing more oil from the SPR up to 60 to 70 million barrels. Hence, we're also reversing that. So far, it's going to plan. Swing shorts, fabulous price targets have been tagged. Short covering, short squeeze, chasing. TNX below 1.94. XLE rolling over. I know I'm showing USO, which is a really crappy substitute for crude, but I have to use a different platform and I'm too lazy to bring it over. Anyway, the point is we tagged beautifully, and also some of the, remember my intermarket? Here's XLE to SPY, resistance. Another reason why I think we pull back in the energy space, not just the yield, the 10-year yield softening. Right? Okay, so we're there. Oh my God, we literally tagged 103 and reversed down to 97.5. And I just said 102. So crude literally tagged 102, overshot to 103, and then crashed back down. We're at 97.5. Come on, help me. There we go. I'm going to probably do this, okay? And I've been very focused on the March, sorry, not CRM. I'm trying to get off this here. On the read that I had for the day, okay? We bounced really beautifully. Oh, there's number one. You can't see it though very well, can you? We still have room to the downside, but we did a good job. Bounced right off that 4121. We've got some nice resistance at 4302. Biden's in Q&A. It's not really interesting. These are working really well. That's all I have. Oil softening. Markets turning green, or they think. Basically, interpretation is no SWIFT sanctions, no strong, more bite than, you know, sorry. Yeah, that I suck at idioms. All right, so not part of the deal at this point. SWIFT is not part of the deal. That's it. Pretty weak. Not a good look. I would say it's not a good look for Biden, but that doesn't, the market still is bouncing on that news. And what can I tell you? We've only bounced into resistance. We have a long way to go. All right, I'm going to take a break. It's 2 o'clock. I don't think Biden's going to say anything new, because the most important thing, what about troops? What about SWIFT action? SWIFT meaning the payment system. And what do the levels look like? I need to dig in, obviously, at end of day and take a serious look at where we are with big picture. I've gone over a lot of that, and intermarket. For right now, I would say we're going to pause into the end of the day. I hate this. It's minuscule trading, right? I don't trade on a 5-minute. I use a much, much bigger and different lens. So for me, swings are working extremely well on the short side. The intraday bounce proving itself in price, but not underneath. Underneath, we're still weak. So just keep that in mind, that we're still, that's distributive top, break, rally into resistance, break. We can have a rally, but we're still in distribution. So big picture, I'm not excited about, you know, anything I see here today. In fact, I see breaks. I see some, you know, solid, that's the 50-week, right? I mean, that is from COVID low. See that trend line? That's a distributive top since June. That is a gap down on a weekly. That is a 50-week that's breaking down. That's a Bollinger Band that's expanding. There's no part of this market that says, "Ooh, we're going to go to all-time highs." None. But I will give you an intraday bounce of size. We better get going though, and have some follow through to make it count. And here's why I don't think it's gonna. There's nothing here that says buy. This is cumulative volume. This is in distribution. There's nothing here. I can't even show you on a clean chart. I've got so many bloody markups on it. This just says rollover. This says flatten, maybe a bounce into resistance, like, okay, maybe, big maybe. I'm getting a little generous here. It's not my, maybe. If we get really, really something noteworthy, somebody says this is, can't miss out, we got to buy this, and they start to come in, and I mean buyers start to step up. Right now that's not buyers, that's sellers, net sellers, then maybe we get above that 50-week and we can make a little attempt at the 10-week, maybe the 30-week, you know, maybe even that trend line. But I don't see it. I don't see it. I still see sold to you market. On the table to sanction Putin. Oh. Biden also says highly unlikely this will last a long time as long as we are resolved on sanctions. All right, so there's nothing there. There's just no teeth. I don't even want to talk about it anymore. So disappointing. It's just so disappointing. Anyway, we have a bounce. I'm going to close myself, but here's what I'd like to do. No SWIFT. Yeah, that's just really disappointing. What about? I want to get the oil chart. That's what I want to do. Let me get oil chart. That's not the one. Nope, can't do it. I'm just going over a few things. Hold on. Oh, it's a black candle. That is a black candle for gold. I was asked about something. I'm trying to find my chart in my intermarket. I have too many. Yeah, that's a no-go. Can't find it. The one that I'll find it later. Yeah, the overlay of XLE and crude and high yield bonds and the rest, it's somewhere in there. We'll go over it later. In any case, for right now, I apologize. I have not stayed focused here on the Biden speech. I went off to look at crude. We're now $7 off the highs. So I had this theme that we would hit 102 and then soften. We actually overshot to 103 and we are now down a bit hard. And that is the next level of concern. So the Exxon and XLE and all that other stuff is definitely coming back in as expected. That's a really nice trade short. We've had that on actually for a few, I'm going to say more than a few days, but that was definitely tested, right? That 70. We're now coming very quickly down. So we've overshot. That spike is being sold. Long story short, in oil, corresponding weakness in the 10-year relates to the energy sector getting hit. I still see no reason on the earnings plays to get excited, right? The coin, I think, will disappoint. Square, I don't know. Beyond, I could care less about. ZS, I think, will disappoint. Oxy probably does well. Oh my God, they've been printing money. Vail probably does well. Fitch, no interest. Carvana, think disappoints. So I have opinions, but I think for right now, the IV is ridiculously expensive, right, to play, unless you have some advanced option tactics. And Archana can talk about that. So how would I do this? That's an idea. Let me take a little pause here, see if Archana wants to come in and share some of her advanced option tactics, and then specifically what, if you have any questions on how to play some earnings and the like. I'm going to take a break and get a coffee, maybe get a yogurt, that kind of thing. I definitely will keep the room open. My normal routine is I do a few hours in the morning, and then I post my market thoughts, my write-up, and charts and intermarket and all that other jazz in Slack. So, and touch base with contributors, and customer requests are typically, client requests are in Zoom chat. But I have not had a chance to really do that. I wanted to see if we were going to have anything earth-shattering in the Biden release. There was nothing, no teeth. We have that intraday market bounce on cue. We have oil and gas, the energy sector softening on cue. So right now, everything is working to plan. What I don't know is how long this bounce is going to last, right? So I'd like to come back at 3 o'clock and do an end of day review. I did a lot this morning in intermarket and kind of explain how I process this chase, swing, and trend time frame, but mostly it's been answering questions. I wanted to just kind of open the room up, do an educational kind of thing when it comes to how I look at this, and then the intermarket that I use to support these calls. I am still a little overwhelmed here with how busy the room got, so that I was trying to answer questions and lost my train of thought on what I wanted to actually go over today. So apologies if it seemed disorganized. You'd be right. Okay, Pentagon is still ordering 7,000 troops to Europe, but we're not going into Ukraine apparently. Anyway, there's a lot of watch what they do, not what they say, in my opinion. I will still be looking at levels for volatility, but for right now, as I mentioned, when I go on break, I am still looking for this retracement to 31, and then let's see what happens, okay? And I'm still looking for softness in the 10-year and oil and gas energy sector, and then of course, gap fills in play, sorry, and some are better than others, there's no question about it, but for the most part, big picture, we still have a lot of room to the downside, okay? So I'm not gonna kid you. I think right now we're having that bounce into resistance. Next time we break through these prior levels, for example, it's a strong go short. So we're not there yet. We could have a few weeks of digestion. We have 2 weeks to go for FOMC. Yeah, so let me just ask if anyone wants kind of advanced options. Archana can go through that. And I think I got through a lot of questions, but I know it's been disjointed. I do realize that. All right, so I should have clarified. If you wanted me to look at anything, Zoom Q&A. Zoom chat is very much relegated to Rithika and Tiffany and Archana and Sudha and Craig. Although I haven't followed chat, if you had put something in there, hopefully you got a question answered by one of my moderators. Okay, I apologize, I did not. Yeah, Rithika's been awesome. She's been posting the news faster than I can read it. So there we go. Yeah, we still don't have a lot of energy here. So short-term oversold, but if you have questions on earnings plays, especially when it comes to using advanced options, definitely ask your question in Zoom chat. That's directed at Archana. Tiffany's kind of capturing what we're talking about here for later. We do a trading room recap for clients that can't be in the trading room. Yeah, so I'll do that real quick and just kind of show you. I'm Whoa, that was a big, okay, so gold was that black, that was a black print. We broke 179. They are selling it on the commodity front. Energy, gold, silver. While they rotate into tech. All right, so that was, long story short, a very, very good place to take profits at that 182.64. Had to hold 179 to be bullish. It did not. So down it goes. And a lot of other plays have had this bearish engulfing. We've also seen pretty much across the board. Short term, they're selling. Little reversion to the mean. Oil, as a result, getting tagged a good amount, as Robert has been warning. But what I wanted to say was in how this works, let me just see if I can kind of go over a little bit here. And you feel free to ask questions. Yeah, I post these indicators for clients as well, so they can basically track the action in the underlying strength. And right now we're starting to get a little green ticks, right? It's not just on my computer. We can start to see a little bit of stabilization here, a little bit going green. So we stopped going down, the rate of ascent slowed. And intraday, we're trying to put in a base. As a result, we got some solid selling in some commodities. And we got a rotation into growth. So for as long as it lasts, that is, we got some pretty large volume in SPY and Tesla. We need a little bit broader market strength, right? To really put in the low. Just answering questions, sorry. Okay, so I'm going to leave it here for a quick hot second. As we have a nice bounce, right? We will still be monitoring, even though I'm not going to be doing this live commentary all day long. We're still inputting lots and lots of this analysis and trade setup specifically inside Slack. So that's the one thing, unfortunately, folks don't have access to today, but trust me, it's in there. So we have a whole bunch of very live, let's just kind of show you this in a second here. Okay, so what I typically do is I go in, this is intermarket tells, and this is the one I start talking about. I'm getting a little nervous here. We're getting an inverse head and shoulder. We're going to have a volatility event. The market doesn't know it yet. Okay, so I'll go through all kinds of stuff in here, whether it be my funky buy sell figures, whether it be breadth indicators. I mean, I got all kinds of breadth indicators that I go through every single day, and they're very compelling stuff that, for example, we're not even oversold yet, right? Okay, then I will update that. So I'll go through and I will be posting where I think we have a capitulation low, and then where I have to see, in other words, I want it proven before I get very excited about a particular move. Anyway, these are things that definitely will help me spy rotation into sectors as well, right? So gold, for example, we finally spiked higher, and relative to SPY, it started to outperform. So this is all the kind of intermarket analysis that I will do on multiple time frames. So some of this is going to be absolutely uninteresting to folks, okay? But for example, SPY to IEF, which is a treasury bond, basically it showed me a little head and shoulder here as well. We had not broken this particular moving average since COVID. So I knew we were going to soften and blow out some of these lows. We did. Big picture, I still have some very big concerns about the charts on a monthly, but we haven't confirmed yet. So I'm updating that kind of stuff. Anyway, fractals, you name it. There's all kinds of intermarket analysis that I do for clients because I think it really does prove a point that we've got some weakness coming in. And this is just basically confirmation, distribution, rollover, very similar to COVID, very similar to 2018. Okay, you kind of get the flavor for that, right? Right now, we have broken this trend line since 2009. Now, sometimes head and shoulders can be a continuation pattern, especially when they came back, and formed this very strong support. This was another nice strong support in 2018, actually 19 after the COVID, the December lows, but now we're actually breaking down, etc. So I'm going to go through all of that. Lots of macro to micro support where I'm going through and identifying earnings reactions or policies, delisting of equities, credit stress, my market thoughts, obviously. Volatility reprices everything. Be careful. This was a warning on February 18th. I'm very much worried about the 10-year. It's critical. We get above it, market breaks. We get below it, and bonds bounce, market breaks. So either way, it's a lose-lose for equities, etc. I do some newsletters. That's, when inspired. For the most part, it's posting chase, crypto, sector rotation, swing, and trend trade setups specifically, right? Whether it be the home builder trade, right? And here's the price target, 71.18. When that fails, 65.46. What did we tag today? 65 and change. So this is basically how it works. And then I have my contributors. Archana does advanced options. She's posting exactly what she's trading, when she covers it, and how she's trading it, etc. Aisha has a fundamental take, so she's very much focused on, the underlying UPST, NVIDIA, Snap, Facebook. Dom does his options as well, and futures, as well as Suda. We've got Rithika, Bob, and Craig, all the contributors, and Tiffany. Oh yeah, Gamma Flow, that's hot. These are fabulous ranges. And also, if you're familiar with Gamma Option Flow, these are the trigger points. And it's very, very interesting that when my price targets also align with Tiffany's price targets, it's a win-win, right? So we've got more confirmation because I'm not using Gamma as my price target indicator. So lots of contributors. Today was just, I don't know what, kind of impromptu. I think we got a break here in, oh no, it's moving. All right. We definitely have a lot in here for anyone who's interested, but today was mostly, what are we going to do with this oversold bounce? And then big picture, where do I see things moving? Got some fabulous, fabulous members from retail to institutional, and they're hanging out, sharing their trades. Some are absolutely expert at smaller time frames. Some are, superb option traders around core positions. They have very deep insight into particular domains, whether it be commodities or banking. It's impressive. I got to tell you, I get some of my best ideas from my clients. So I did today kind of an educational thing and answering question. It was incredibly impromptu. So we didn't have any way to get you into Slack because basically this is an onboarding kind of programming thing. But basically I just wanted to kind of say, I hope it helped. This is where Tiffany will kind of overview what we went over that day and the price targets and updated trends, etc. So we're really covering a lot. I hope it helped. I wanted to just kind of extend, obviously, a thank you for showing up and showing some interest. And I hope it wasn't totally boring. And I hope the contributions at least helped guide some of the, your time frame thinking about how this can be very much a chase on a small time frame, but definitely unsafe on a larger time frame. And obviously, I've got a lot of opinion on the risk that we're facing, but I also think we can be sideways into FOMC. This can be headline driven all the time. So add more time if you're short, right? That's my personal opinion. Puts are extremely expensive. Put spreads will still work. You might have to sacrifice some of the outsized gains that you're used to if you're chasing typically, but you'll be in a better position where you have, in other words, you want to have puts before you need them. So that's why I work so hard to time tops. So we're in good shape. We're like really in good shape. Clients are well positioned defensively. All right. So I don't know if we're going to need to do anything more tomorrow, but I will open it up to questions for the ladies, right? Unfortunately, don't have access to their channels, but if you want to ask what they're trading and how they're positioned into earnings or what gamma flip levels are, just hit them up in Zoom chat, because that's where Tiffany, Archana, Sudha, and Rithika are posting. And also market moving news. Right now, I kind of see a pause, right? I see tons and tons of news, but nothing that I really am going to get excited about right now. Market, Russian bonds marked to zero is a big deal, but not necessarily for this event that we're, trading today. The SWIFT system is a big deal, but apparently Biden has softened on that. Yes, recording, we can do that. Recording available. I got to figure out how that works. I'll ask James, because not for nothing, this was totally thrown together. I woke up this morning and just said, people might be freaked out, but there's still lots of meat on the bone. I don't want you to get, all discouraged, but at the same time, we got real reason to be risk off as it relates to tightening, more so in the bigger picture than just the Ukraine events, which are absolutely front and center. And again, I did not want to talk politics. I did not want to talk theoretically today. You're going to see enough of that. What if, and oh my, I'm not dismissing the severity of what's happening in the news, but I just think I can provide a balanced view of how to manage emotions and expectations in a bigger time frame. And honestly, for me, this is playing out really well. There will be a lot of misses, lots of misses, but I have levels that I'm very clear are going to be taken out. They're magnets, and then we're going to bounce into resistance, and then we're going to roll back over again. That's me. That's how I'm trading this. That's how I'm looking at it. And so far it's worked really well. So you just asked, hold on. We're still just nothing. Yeah, we're still pretty weak. But VIX is not down to that 31 yet. I still want that down to 31 before I think we have a really, really solid reshort opportunity. Almost there. Almost there. But that SEC probes trading by Elon Musk and brother in wake of Tesla CEO sales, according to Wall Street Journal. All right, so we get some massive rejection here in the precious metals complex. Commodities are getting hit while they rotate into the growth sector for now. Tesla hasn't even moved on this Wall Street Journal article. Nothing. absolutely nothing. Okay. Just, they could care less. Let me just see if I've got, what was the question? LEU, LEU, that's, I'm gonna guess that's, yeah, that's a lithium. No, uranium. Not lithium, uranium. I had higher hopes for this whole complex. Unfortunately, we got the slinky going on around the 200, right? So we traded down into the 200, into the 55. We broke the 200. We have a bullish engulfing for now. But big picture, this has to stay above the 50 and it has to work above 45 to really, no, 50. Unfortunately, this space, it got sold. If you are trend long, then you have more patience. If you are swing long, you need it to get and stay above the 200-day. And if you're chasing, yeah, it's not a chase vehicle at all. I wish I had something more bullish for you, but I don't. Okay, overstock you asked about, and DraftKings. Oh, we did hit through the 50-65. We have volume coming into the market. I will give it that. Look at Disney just pushed up to the 147. Again, big picture, it's still under 153, but it is intraday. The bounce is still in play. You can see it in volume. Stopped going down. Yeah. $11.42, we're there. Let's see what happens. It's definitely a bunch of bullish engulfing candles on this intraday bounce. The question is how we're going to do. How are we going to do after tomorrow? Right now, it's very clear. Intraday bounces of size, oil dropping like a rock, gold reversing. It is the value to growth rotation. It had been growth to value. Now it's, we sold the rumor of invasion. We're buying the news of invasion. Tesla does not care that the SEC is investigating it. Not even a little. Let it just drop into 31. Let the market rally. We're almost there. In other words, gap fills for 1, New York FANG bounce, number 2. We definitely have VIX falling back into 31. Market's bullish as long as that's the place. We had very strong rejection on gold at 1980, thereabouts. Because it was a yearly resistance. Yeah, I can see that. I can see that. If we get some double bottoms, I'm not really so excited about that. Like I like the TNX below 2.065. But right now, not so excited about much on the macro side. I think we just kind of soften. I mean, this was corn, wheat, all of those huge commodity gaps got sold. Oil was next. And we're already short XLE, XOM just because of a pullback. We could have some time to digest and then move higher later. But right now, I think, I'm sorry, Stella. I think we're just having a very sharp reversion, rotation into growth. Some serious short covering rallies right into the 10-week. Nice timing. Wow, crude is already down to below 92 bucks, dropped like a rock. Look at that. Even USO. I discounted USO as a put. I said, it's not as good as XLE. Guess what? That's pretty darn good timing there. You did a great job. So it did get rejected at the 200 week in the same way that the 200 week serves as support, right? The CRM, for example, that's 200 week. It has also served as resistance for USO. You did a great job. I was totally transfixed with just XLE, XOM. What do you want? All right, I haven't gotten away because I have not answered the questions. That's why I was basically. Yeah, Tesla could care less. We definitely stopped. We're starting to move higher. All right, so now we've moved back into that resistance. Almost there, almost there. Because you asked me how far does this QQQ bounce go, right? And that's what I'm timing right now with that New York FANG chart and with VIX. As long as VIX fades down into 31, market is bullish. Said that earlier. As long as FANG is bouncing off that monthly support, market's going to move higher, rotate into the Nasdaq plays, into growth. Also the 100 week. So it's definitely doing so. Uh-oh, Oxy just got halted. They have earnings after the close. We went from the top of the Bollinger Band to the bottom of the Bollinger Band, by the way. Look at GDX. This is also the 3 and 8 and 21. Would not surprise me, honestly. We got extended. We came back into support. Very bearish for now, but then we're going to be right down to the 200. Wouldn't surprise me if we get supported here and then later move higher. But for right now, don't play with that. That is definitely bearish engulfing. Just like DBA. You can't see it, but corn as well. Wheat, oil, right down to the 21-day. And bonds, careful on bonds. Very, very strong buying just came in. Stopped, the rate of descent slowed, stopped, and then reversed. Boom. This is basically where we broke down. We're almost there. Oh! All right. If you're still with me, feel free to ask questions in Zoom chat. I'm going to take a call from my daughter. It's very, very worrisome. There's no question about it. Okay, hold on one second. Can I do this later? I know, but it's a little bit focus on market action right now, and I would very, very much like to have a in-depth talk, but right now is not the best time, baby. Can I call you right after the market's over? For huh? Really? 4. So an hour. So literally at 4 o'clock, I can call you. Is that okay? All right. I love you. Thanks. Bye. Thank you. All right. Thank you. Sorry. I have 2 daughters over in Europe. So they're both like, what's going on, Mom? One is in Zurich and one is in Greece, but she's actually in Vienna. I mean, she's temporarily on vacation in Greece, but okay, Stella, move. So please, Archana, help me. I did not see what questions were asked. I will be honest in Zoom chat. So let me know. The recording, I hope, will be available. Yes, we'll get James to do that. Archana, did you post your Etsy trade in? Did you post your Etsy trade, which it looks very much bullish? In Zoom chat? All right, we're moving up to that 338. And look at the New York FANG, right up into the 100 week. So 6095. That's where I expect this bounce to pause, right? QQQ 338. And this New York FANG bounce into resistance, which is basically the January 24th low and the 100 week. Those were tells. Waited for basically this also. Remember I said at the very beginning of the day, I was waiting for this advanced decline gap to get filled. We have not filled the gap in breadth, however. That was a nasty, nasty, nasty break. But we did stop going down in volume. We tagged literally the breakdown and then slowed. So I think right now we've had a major short covering rally into resistance. I think that's completed now. We literally had pre-market bounce, 190.84 holds into the 3-day. Check out the IWM 3-day. Here's weekly support. Here's intraday support. And here's the price target, 3-day. Diamonds, we're not even there yet. Really, really not even there yet. So there's still room. I'll go through diamonds in a minute. Q, they were the first to rotate higher. Look at that. Boom, right into the 3-day. Gorgeous. Apple, boom, gap fill, 160. Gorgeous. This does not mean that I think we're going to all-time highs, okay? This is an intraday bounce only into resistance. Very nice one, but we are literally, all we did was pull right back down to 31, which is monthly support. VIX is still trending higher on a weekly. It's going to be an interesting aftermarket review of my intermarket analysis. Yeah. Stuff that got us into this swing short. It has some work to do to absolutely convince. But for right now, we still have room, which is interesting on the diamonds. That's the next, look at the gap fill. So now the diamonds are starting to gap fill. What was my top long this morning for a non-index long? CRM leads the diamonds off that 200 week. Large cap is still having a bit of a tough time. Has not made up anywhere near the ground. It's definitely been in the growth sector. CRM was the strongest one. Look at the change since open. This is why I do what this is why I love time frame congruence. That weekly chart that I showed you since the open. Look at that, 9% since the open. What was the one that I was most confident about? That 200-day bounce, that 200-week, excuse me, level. And FANG off of that monthly support right into resistance. Okay, so now don't take it for granted. You've gotten a lot of intraday chase out of your system, I hope. So now we have the final power hour, 3 to 4. What's going to happen? Maybe some profit taking. Maybe some new VIX, new gold. Let's go take a look. VIX is definitely looking like a crude candle and gold. We still have a lot of levels left though. Gold came literally outside the Bollinger Band. Remember that price target? All the way down to the bottom of the Bollinger Band, also known as 21-day support. This is going to be an inside day most likely tomorrow. Microsoft moved about 20 points off the bottom. There's a Bollinger Band tag, big move into resistance, and then it took that right out. Bollinger Band tag, moving right back into resistance. Solid chase, but Microsoft is still below 305, 306 area. So 280 was just a not low enough for my price target on this. Then I said 278. We obviously over this 278 was the prior high. So we took those out and then we reversed pretty violently. Let's see if we get some follow through here. So far, backwardation has retreated. Yeah, I don't know about First Solar into earnings, honestly. No edge there. But First Solar, from a chart perspective, look at this. I mean, this is impressive. I remember this very specifically because we were into this because well, I'm going to do it here because it's better. This 123.21 is literally price target when this was a trend trade before it tagged 123.21. That was created from a 2007 high. Since it tagged and got rejected at that monthly resistance, just so happened to be monthly resistance red every single week. So when you ask about an earnings play, I don't know about an earnings play, but man, oh man, this has come all the way back down. Today it's formed a bullish engulfing. That is stretched. That's pretty nice. If you are interested, I know you're looking at this. I like ENPH better, but that is a pretty nice tag here. Maybe it runs now up into earnings. Earnings is a week away. That's some really nice support after a protracted downtrend. I think that's a good idea. How are you going to play it? What options are you going to use? Oh, okay. Yeah, no, I think that's exactly it. So you don't want to trade it through earnings. You want to trade it into earnings. That's a great idea. Whoa, look at that scoop. All right, so we definitely got emerging market profit taking here, bounced right up into not only monthly resistance, but also the 200-week. That's a nice scoop, I will admit. So dollar is definitely retreating. It also hit resistance on a monthly. Dang. Strong. That's what I mean by emerging market is such a dollar play. Pretty much across the board. All right, so growth stocks have rallied, what, 3.5% off the bottom. And value stocks have fallen 4 or 5% since the top. Impressive. Now we need follow through. Probably have an inside day tomorrow. That's my bet. Where does SPX get rejected? Well, Qs I have 338, right? Sorry, that's a busy one. 338, 338, 338. SPY 4302. Yeah, we got some room. We could still move higher in this one. Right now, we've done it. I think we're done. Like, this is intraday resistance. Beautiful. But I'm going to caution on the end of day pause. End of day pause is my baseline bet. In other words, a day is done. Yep, VIX has filled the gap. Qs have filled the gap. SPYs filled the gap. Oil has retreated with gold. Everyone's now excited that inflation is over. No, we need follow through. Carbon, the ETF is kind of coming down with oil. Another case of kind of fake breakout, fast failure, came back inside the wedge, and now it sits here. So Apple is literally a 160.45. That's, I mean, that's, for me, that's enough. Like, if we have tomorrow an inside day, it would not surprise if we come back to 158. So it depends on your time frame. Otherwise, if you're swing long, for example, into next week, resistance would be at 163.5. That's where I would expect it to hit its head. Oh, I'm getting questions about the indicators. Yeah, so let me just explain. I have a whole bunch that I use for the intraday breadth and such. Let me explain. So first of all, this is VIG.io. I have my risk indicators here. And this is using a combination of all the stuff that I've been showing you in the room, basically. Right? So when we actually started to, in this most recent version, we started rolling over about the 16th of February. And that uses a combination of, and that's on a 30-minute, by the way, that uses a combination of volume, all the things that I show you intraday. And this is a swing time frame. So it's basically, it triggered a little bit early on the 14th of February. So that's one set of indicators that I use. They're proprietary, but they're housed on VIG. They're like 40 bucks. It's not a big deal. The other is from my charting software, and why I use this charting software. I can do this advanced decline look, right? Big picture. And also when to bounce. Fill that gap. Advanced decline, I'm sure you can find in other charting platforms. Okay. I make these available though also on for clients here. It's like a widget. You can change it on any time frame. But that's nowhere near as insightful, I believe, or helpful for clients as actually knowing how to read this, right? So then I use this, for example, and I chart it up. Right? I'm literally spying the same things I'm doing on my technical analysis. What happened back in November, for example, this breakout higher with small caps. We had a huge surge in the value rotation. Then what happened? Fed Powell came out and said, we're no longer going to use the word transitory for inflation. And interestingly enough, the market distribution underneath the surface was very clear. We were going to form this kind of head, and then we rolled over very firmly the first of the year, right? We were a little bit, yeah, this is nicey. So then I use all that intermarket analysis as well. But the point is, this look of distribution, I don't want to use that one. I don't want to use that one. Okay, here. This look of distribution, when price is still moving higher, knowing kind of how to read it, doing candle analysis and trend lines and all that stuff is going to be a little bit unnerving for most folks. So just having the data is not the same thing as, you know, using it in context. Now we are definitely softening here. We're going to churn a little bit. We have a bullish impulse when this gets above and starts to move higher. So when you ask, for example, in the in the what charting platforms will have this, I don't know of many. I have it custom created here, right? So I have built this in here, which is very, very helpful in timing, and it also does this wonderful thing in showing when to go short, for example, right? So clients have access to this. Very, very, very important. And then I put the indicators behind the paywall so they can do this kind of thing. Okay, we're still, there's no bid, no, oh, we're stopped going down. Oh, we started moving higher on the 15-minute. Okay, now this is a good time to, you know, keep going. The point is, it's all context. I'm just giving you lots of tools. Remember when I showed you that example with the divergence where we had SPY way up here, but this was rolling over? Yeah, that was actually November, right? So this is going to look really, really messy, but that's a head and shoulder. So it just kind of lends to my whole premise that we're going to roll over. Also, look at the oscillator, right? So we had one more little bounce and then the trounce. Now we're starting to flatten. Look at that. We went from very red to now we're green. Now we got diamonds playing catch up. How much you want to bet? How much you want to bet? Now we had Qs go first. Look at that. Boom, right into 338 soon. Remember I just said diamonds have some catching up to do? They're the ones that are going to take off next. And CRM led. Isn't that cool? I grabbed the yogurt. I love it. Oh, yes. LL, in regards to options. So I'm going over a ton of stuff today, right? But we have education on options, even advanced options, for example, for Archana, from Archana. Yep. But everyone has the option to trade stock or options. I give levels for both. So everything's based on the underlying, of course. Everything's based on the underlying. My typical pattern is I like very much to do at the money or slightly out of the money. I am not a big swing for the fences. You know, if CRM is trading at 190, I'm not going to go and grab the the 230. That's not my idea of a good time. I want a high probability. So I'm going to do mostly based on price targets, for example. So, and also time frame. How reasonable is it for the Qs to reach that 3-day today? Now, right now, they're getting a little excited. I think when we hit 338, we'll see a pause. But the point is, I think that this time frame also matters. So learning about options is very much learning about how you want to manage risk. I don't sell a lot of anything naked. It's part of a defined, maybe finance put spread or call spread, and it's out in time, or it's, again, an event like earnings. But I typically don't. I typically do directional, and I'm trading with volatility. In other words, I'm expecting volatility to move higher. So yeah, we talk about all that. Let's see what happens at 338, because this is getting a little eventful. So it's not a normal day when we have a reversal from what? Down 3% to up 3%. Not normal at all, but a lot of fun. Yes, to answer your question, I do this every day. So what I'm typically doing is basically this. Some of it is considered rambling because if we have a market that is like watching paint dry, I'm going to go and review some intramarket analysis, some sector rotation, some trend trades, right? Those are the setups, the confirmation of when to go long gold or short energy, that kind of stuff. But intraday, I want to answer questions clients have. What about this? What about that? And then, of course, time frame, chase, swing, and trend. What are the price targets? And how convicted I am for this move kind of thing. So very much focused on looking at market moving news, looking at the trade setup, looking at option flow. So that's all intraday stuff. Market moving news, option flow, trade setup. Absolutely. Sector rotation, I'm always doing in my head. Volatility, I'm always doing in my head. And then there are points for inflection where we have to pay attention, right? So like, for example, the warnings that I've been putting out, public service announcement on Twitter, we haven't even had volatility yet, for example, right? So I'm doing that all day long. And live, like today, more educational, answering questions, but most of my stuff is going to be much more thought out and posted in Slack when I'm not running the trading room. So you can see those setups, right? Like you're going to see CRM had a price target short, swing short into 195.72. You're going to see XHB had a swing short into 65.5. Do they overshoot? I'm not perfect, but the point is I have some strong conviction in what I trade. So this morning we had this oversold standard deviation, short covering rally that then got very excited after Biden came in and said, we're not going to really do much. So the market's rallying very hard. We still have levels that I'm looking at for a tag and then a pause. The thing that I'm looking for also, though, honestly, is what we're going to do between 3 and 4. Pause, I expect, but are we going to sell? Because this candle right now is very bullish. That's exceedingly bullish candle for a continuation play into tomorrow. And if we have this kind of candle on a Friday, wow, that would actually be very interesting for a Monday trade, but I wouldn't do it. For me, I would wait until Monday. And here's why. Because lots of meat of the bone has already been devoured, right? We bears have eaten well. And bulls, if you are flexible, have obviously eaten well. You know, nice little snack here. But the meat for me is in this kind of stuff. So anyway, nice snack, big meal. So I'm looking at this going, okay, now Monday would be a much better directional play for me. I will have a much, much higher conviction after I do all my intermarket analysis for the week. And then Monday, how do we open? Are we going to open above 338? That will be, to put it mildly, bullish. Or are we going to soften here and more likely close around the January 24 low, or even 327? This is still resistance. It's bearish. Above 338 is bullish, below is bearish. We had a 100-week bounce, very strong. But we have a huge channel here. Yeah, so MeLife, for example, bounces at the 200 into the 100. This kind of shows you how wide a range can be. Bounced the 200, very weak, into the 10-week, took it out. We're bouncing back into the 200 now. To me, this is still a magnet. At some point, this will fill. This will fill. Not today. So it's all about time frame for me. Oh, thank you so much, Chris. I appreciate it. Yeah, the Discord is a smaller product. You know that, right? So Rithika grabs my chases and she populates that. And my market thoughts, you know, they get populated. Basically, you have a younger community. I'm not going to say younger, a little bit more inexperienced. So they might not understand all the macro and all the intermarket. So they don't get any of that. So this is definitely Fishing Club is, you know, lots and lots and lots of fishing, 8 contributors, macro to micro. Discord is definitely smaller time frame, right? That kind of gamification hit. Community, lots of education and mentoring. So it's really, really good for newbie traders, but it's not going to have any of the trend stuff. It's not going to have any of this, you know, time frame congruent stuff. It's not even going to, it's not going to have the trading room. So you're not going to know what I think is MeLife is still going to head down here, right? So it's not going to have the custom engagement, but Discord is definitely an option for, and it's wicked cheap, stupid cheap. So yeah, try that if that is more your thing. Macro is a whole other ball game, right? Big size, big institutions, or at least boutique institutions that have a very different mindset. They're not trading TLT. Okay, they're not, that's not what they're trading. they're trading the underlying commodities. They're trading the bond market. They're, putting on some size. They're trend trading. So that is a special feature. And that is the Edge product. So the Edge product is very much focused on that macro advisory service that Craig supports actively in Bloomberg Chat and the like. I bridge the gap between the retail and the institutional. I will cover any asset class over any time frame and very much focus on volatility, sector rotation, because there's always going to be a bull market somewhere. And when in lieu of volatility, that's when, in lieu of sector rotation, that's when volatility spikes. So yeah, I think the Fishing Club is definitely the best place, because you're going to get all of it. You're going to get the macro and the micro, right? Discord is more community driven for newer traders. And then Edge is definitely more sophisticated retail and institutional. Does that make sense? Okay, I'm still a bond bear, by the way. So that's, when you say look at TLT, boom. Yeah, so this is definitely how weak that space is. And let me show you that chart. Very, very good point. Let me show you that chart. Almost there. Okay. TLT contra. Okay, are they buying this strangle for TLT or are they selling it? All right, let me grab my TLT. Love this chart. Let me show you something on the big picture. Why I'm a bond bear, but I got to find it first. Got way too much. Whoa, we really totally got rejected. Okay, just like gold. Yeah, no, I'm still very bearish. I'm bringing up a chart on. Nope, not that one. All right, so in the same way that I showed you that USB chart, here's an example on the TLT. So actually, let me do this real quick. I'm going to send that to you in a different way. This is going to be gobbledygook, but trust me, it is just such good stuff. Dollar is still fading. VIX is still at 31. Qs are still pushing up to 338. All right, so this is TLT just for those that are asking, because I have my own little special way of doing intermarket on TLT. But the point is, I can see when there's obviously an uptrend and then we obviously end it, we come back down. There are some particular indicators that I use. Back in August of 2020, I said, gold and bonds are done going up. And we had this very lovely rotation out of bonds and gold. And I just kind of show here, you can kind of see this trigger right here as well in my indicator. All right, so I timed it extremely well. Gold and bonds stopped going up. I was high conviction. I had all kinds of macro reasons. I had other intermarket reasons as well. But the point is that this kind of shows it, because we're going back all the way to 2008. So where are my levels? Too short of most recently, and I did this Bloomberg segment back in September and then November, and even again in January, and I've had 4 financed put spreads on TLT. Doesn't mean we can't bounce a counter trend bounce, but big picture, This rolled over, and even though we got into resistance, look where it absolutely got rejected, right? So I'm still using technical analysis to spy, and sorry, there's that little arrow in the way, but you get the idea. So where are we going? This, you can also see how we kind of rolled over down here with my indicator. That's a rate of change. Ignore that for the most part. But when we spike higher, we have a massive move that typically tops out. So long story short, I've timed that. I'm a bond bear, inflationista, rate spike girl, the whole thing. But the point is we still have some levels lower. I think that's just it in a nutshell. So whether we come all the way back down to 120 or we just go to 130, I'm fine with that. Let's go to 130, then have a little bounce and then continue lower. But big picture, this is why I am still bond bearish, but it doesn't mean we can't have an intraday bounce, a swing bounce, like a counter trend bounce. But this is still busted. Bonds are still in trouble. I believe very firmly that this year will be a year of underperformance for both Nasdaq and for bonds. I should say markets and bonds. We had 13 years of outperformance in Nasdaq. So I just don't see how this is going to get back above basically 154 and change, 155. I think we're going to roll over to 130, maybe have a little bounce and then break to 120, or it's going to be all at once, very fast and scary and all that jazz. So I just don't see it. I do see how we've rolled over. This is yesterday. I'm going to have to check all my intermarket. We probably have bounced. Oops, sorry. We probably have done one of these, right? We probably came down and then very quickly turned and had a little bounce. I'm going to go through all of my intermarket tonight. But the fact of the matter is this has been recommended short with weakness under the surface. I can go over this. The point is over and over and over again, we just continued to have selling underneath the surface. It just wasn't safe. And so that's what markets do, slowly, then all at once. But right now, I would not be surprised if we went underneath. This is, again, from the 23rd. I would not be surprised if we went underneath and then we shot back up. Because already I know that we hit this 34, 35 level, and now we're digesting. The problem is once we get above that 35 level, we have more repricing, and it's going to be violent, just like it was this morning. All right, so Tesla. So if we break this on a weekly, that's going to set in place, obviously, same thing, 130, 136 in a nutshell. We roll over on the weekly. When we roll over on the weekly, we have a whole bunch lower. Dollar continues to fade. We're not there, 338. Let's see what happens. I thought we'd pause a little bit into the afternoon. Nope. We are in a big old hurry to get up there. Still haven't filled, but making a good effort. It's not stunning volume, but like I said, they stopped going down. Okay, $30 puts in Halliburton. It's going to take a little bit more. Whatever happened with Oxy today? It got halted. I haven't looked. All right, so it did a great job. You're all the way up to 32.70. So are these protective puts, or are you just shorting for a trade kind of thing. Yeah, 29.20. That would just be a beautiful reversion to the mean. That's all it is. All we're going to do, we broke out above 29.20. We got extended. That's a bearish engulfing. It just took a little while to follow through. That's 1 week, by the way. Remember, I'm on a weekly. Bearish engulfing. That was the tell. We needed to break below 32.71. We did, clearly. We hit the 21 day. We had an inside day, obviously lower high. Now we're breaking the 21, lower low. So 29.20 would be my price target, and probably 1 or 2 more weeks. And I say that because you've got this very strong bullish engulfing, then 2 more weeks of green expansion. Now we need to kind of do the same thing in reverse, right? So I don't think it's going to go there this week. Maybe we need next week at a minimum. I would absolutely have a few weeks on there. And if you get really lucky and 29.20 breaks, then we're going to head right back to the bottom of that candle. Level by level. I wouldn't be able to, I need to see. I would say 1, 2 more weeks until we come down here. And then probably another 2 weeks after that to retrace back to 26.5. So within the next month. And Carvana, I don't have anything on earnings for this at all. I think I mentioned that already. Sorry. Yeah, I've got no feel for that. I just think it's a continued short. Everything bounced, but it's got earnings after the close. No edge, zip 0. Messy, messy chart. Yeah, I don't think I have, and I can't help you there. Sorry. Big picture, I think we bounce and then roll over. Etsy, the reason why I think Archana mentioned this, it's a 200-day bounce, right? Just like the CRM. The difference is it has earnings after the close. So good luck. This is like not my cup of tea. When it has earnings so close, it's just, look at this, 300 IV for this week. That's, Archana and Tim play that advanced options game. I am very, very much a directional trader. So I want to work with volatility. That type of play for an earnings is counting on a volatility crush. It's a premium seller's dream, right? Remember in NVIDIA, I said the only one who's going to win for NVIDIA will be the premium sellers. It didn't move very much at all, and it was a fabulous short right after. So let me show you. That was it. All right, so it had earnings, and remember how it traded right up beautifully from the 200 right up into that channel. That was gorgeous. So that was a nice swing trade into earnings. And then I said I have no edge. All I know is it was 162 IV, and I said premium sellers will win. Let's wait until it goes back to 62 IV. And right now it's obviously a little elevated because we had some drama today, but it did. It went from 162 to about 62 again. Point is, this was a great short after earnings. In the meantime, it just sat there. It opened up pretty much where it closed the prior day, and then it continued to drip down. There's the 200, bounced into the 8-day. Obviously, I had levels that I posted yesterday on NVIDIA, 208.65. Didn't know it was going to happen in one day, but it did. And now we bounced right back up to resistance. So it's impressive, but we've gone nowhere. If you look at a big picture, here we are. We've gone nowhere in 1 month. Where are we? Right there. Yeah, I have no interest in those. All right, so we've definitely come all the way back down to 3106. Wouldn't surprise me if we have an inside day tomorrow. We're literally flat. Stunner. All right, so this is an example where ARC absolutely came right down in the price target for months. I've had 60 as price target, right? 8.6 fib retracement. We've bounced. No question, we've bounced. Beautiful bullish engulfing. We probably have either an inside day tomorrow or a little follow through. I mean, obviously, this is to be determined. We had, to me, just an oversold bounce. There's nothing about this that's trend reversal. Nothing. I can go inside the ARC and I can see, oh yeah, that's a nice bit of green here, especially since the open. And I wonder how many of these are going to look like that in a few weeks. So a few more weeks of sideways, just like this did. Remember on the 24th or 28th, big move, big move, big move. And then we went sideways and then we rolled over. So we could honestly have a move up to gap fill on ARC as an example. 67.73. Would not surprise me one bit if we go there. We have a lot of short covering right now. We've got a lot of bounces on support. But to me, it just looks like a great fade the bounce once we get there. Not there yet. CHKP. Whoa, that's beautiful. Checkpoint is doing extremely well. Let's see what my trend says. Checkpoint, I'm pretty sure, is in my trend list. Oh, it fell off. Okay. So this, for example, is a list of the trends that I track for clients and trade in and out of. They don't always stay on the list. Okay. And then there can be pullbacks like in energy right now, the oil and gas plays. But for the most part, you can kind of see that this, oh, sorry, wrong. I'm on the wrong one. Trend is strong. Oh, there it is. Yeah. Okay. So this is basically 69 stocks in the universe of all US stocks, indices, and ETFs are in trend. My qualification for trend. In other words, they have to meet some technical requirements. You know, there's basically a bunch of high volume, very liquid, optionable stocks. And then I get to see what sectors are obviously staying very, very bid, very, very bullish. This is a 10-week EMA, and this is how far above it is. APTS doesn't count because it just got acquired, real estate sector. But you can see where they've been hiding out. Basic materials, consumer cyclicals, okay, the energy sector, financial services, healthcare, some industrials like Lockheed and, you know, Northrop's not in there. No, okay. Lots and lots of energy. But look at the technology sector. There are so few. There are 3: Palo Alto, Cognizant, and Checkpoint. That's it. Those are the only 3 technology stocks that I have in the universe of all stocks, indices, and ETFs. That is how limited the market is right now. They're hiding out in, have you ever heard of SBLK? It's a shipper. Exactly. They're holding out in stuff that is things. McKesson is distributor, healthcare, Boston Scientific, energy and gas. Point is, this market has been in rotation, out of growth for months and months. So this is one of the ways that I kind of track that. So gorgeous. It's basically a trend continuation, but choppy as could be. It would not be my cup of tea. Just too choppy. CPI tomorrow. Oh, boy. Okay, CPI tomorrow. Hold on. There we go. We had to get into that 3-day. Unbelievable. Okay, so diamonds still have the most of the upside to go. And I am impressed. Just blew through 338. Biden should get up there and speak more often, huh? All right. What is tomorrow? Personal income, PCE, core PCE. Yeah, we don't have the CPI. We have core PCE. That's important. Durable goods, pending home sales for January. Okay. On the 4th, we had actual 5%. No, that was all preliminary. Well, I can tell you we're at 40-year highs. I know that much. Okay, so in a nutshell, here's the chart I was looking for. Here we go. Thanks for your patience. So I posted this in macro to micro support. It's the PCE. You just asked about that, Mike. So in regards to change in personal consumption expenditures, this is a price index year over year. We are at 40-year highs. Okay, so if we come in hot tomorrow, they'll be talking about a 50 basis point rate hike in March for the FOMC. And that'll be a ding on tech again. So right now, I'm not expecting PCE to come in soft. I think we're going to kind of stay elevated and inflation is going to stay a little bit sticky. But that isn't so important for this go round because we've had such a huge growth rotation today on oversold levels, just like we did on January 24th. We had a repeat basically of the January 24th overshot, right? We had a huge 3.2 standard deviation move to the downside. We blew out my levels. Not that we would just hit 4,400. We went 4224 or something. And then we bounced violently higher, just like we're doing today. The problem is we made lower lows today than the January 24th. Right? So PCE normally would have been, I guess, important if we didn't have the Ukraine invasion, if we didn't have this massive Nasdaq bounce. But I think for the most part, it's just going to be more more supporting evidence for why tech shouldn't be as high as it is, that we still have a lot of meat on the bone short. We got to pick our spots though. So for right now, expecting it hot. How's that answer? And then more talk about 50 basis points. But I think for the most part, we're going to have a lot of grinding of teeth here because folks are thinking this is the bottom. I don't. It's a very impressive bounce though, just like we had on the 24th. So let's see what happens tomorrow. There we go. Now we're filling that gap. Way more. I thought we would at least have an oversold bounce into resistance. We've overshot it. That's not a bad thing if you're long and trailing stops, but the point is it's a very strong bounce. I'd like, obviously, to err on the side of caution and say I'm still going to wait for the end of the week. I still think we can have an inside day tomorrow. And I definitely think we can still have sideways slinky into FOMC. But obviously, even Tesla isn't being sold off despite the SEC investigation. We didn't have that typical 330 rug pull either. Yeah, we got a lot of earnings tonight. We got Autodesk, Carvana, Etsy, Intuit, Open, Square. Yeah, VXRT is a done trade. No, VRTX, sorry. Yeah, that's all done. It already moved from 180 to 243, overshot and came back into the 10-week. So now it has to base here for a little while. It was a great trade. I haven't looked at anything else, honestly. Oh, that's so sweet, Aaron. Whoa. Okay. Yeah, this is, I don't know. I was asked about this. I don't know it. It's really not something I usually have anything to do with because it's so choppy and not a great options market, but it did bounce off the 200 week. So it's right into the 200 day now. Not bad. I appreciate the comments though, too, by the way. I know it's a little sporadic today, right? It's not like I'm not doing like a presentation with defined anything. It's just open the room, answer questions, show you how I'm doing intermarket analysis. And we've got great contributors that aren't even being heard, but you've got them in Zoom chat. Sorry about not getting access to Slack, but basically that's where I post everything and so do they. But basically this is a very, very broken market with an extremely strong short covering rally in a nutshell. So I'm going to be watching my intermarket to see how high we can fly. And I sure wish that volume was more representative of this bounce. It would give me more confidence. Let's just put it that way. Yep, Cognizant is still in trend. Palo Alto was a stunning reversal. Good job. Defense contractors are, yes, also still in trend. Sizable bounce off of that weekly trend line. So we literally overshot, got right back in, moved to the 3, had an inside day, broke down, exploded higher. Wow. Like that it's not something you see every day. No question about it. It's still going to be my line in the sand though. It has to stay above, right? This is pretty easy to see. Very oversold, and growth, by the way, is still in a downtrend. So there's that. But when I look at overstock, something I would not normally ever look at, I am seeing if we close here tomorrow, right at the 10-week, if we close here tomorrow, that's bullish engulfing. So I will give it the benefit of the doubt. But some of these support levels are what you'd call dramatically defended. With that 27.96, that was price target I posted just yesterday, and we completely reversed that. So let's see what tomorrow brings. I do not have a crystal ball. I just try to use this intermarket to show inflection points. It has been very helpful. I will look very intently at the end of the week to see what we actually have for my main tells, which is stock bond indicator, breadth. Are we going to have some follow through? This is just the pause, if you will. That's my biggest focus, no question. Any other questions? Because I'm going to do this. I think we're fine for the day. I mean, we absolutely had a great bounce right in and through price target. Volume is still not committed. I will tell you that. It's not bad looking, but it's absolutely not stellar. It's not going to win any awards. Just pace yourself. We've basically just refilled a lot of these gaps. We have a lot of earnings tonight, so take care. Still think ZS is going to be a disappointment, and that will affect crowd and some others. For clients, I'm going to update swings, but not right now. It's almost 4. I'm going to say good night for now, unless you have any other questions. I don't see any, so that's why I'm asking. We can be done, right? Yeah, so Travis, oh, you're in chat. I didn't see you. Oh, let me explain a little bit here. All right, so I have 3 fishing club risk indicators. I just showed you is that algo. It's very much standalone, right? And Discord, but then it's totally separate from Edge. Whoa, hold on. I should probably do this. My director of marketing would probably demand this. I stink at this kind of marketing stuff, right? I just really want to analyze, educate, and trade. That's all I care about. And client requests. So that's why I'm not so active on Twitter. It's like I'm very focused on what do my people need? What do you need? What's your time frame? What's your risk tolerance? What's your experience level with options versus stock? really, this is very different for me to focus on them versus what's going on in Twitter land. But you'll see me more active on days off. So anyway, this is the Edge product, very much focused on the macro, very much focused on the macro as well as fundamental. And then you get all of me. So basically the Fishing Club is the core product, and then we've elevated an offering for the Edge, the institutional. Craig sits on Bloomberg and talks with institutional clients as well as in Slack, as well as dedicated marketing, it's totally different, institutional, but dedicated write-ups in regards to currency and risk related to macro trades. So that's one product. And then of course, the main focus that I just kind of mentioned to you, which is this Fishing Club membership. If you're interested, this is what I do. I come into the trading room, I post in Slack, I do my newsletters once in a while that are very focused on, for example, last year, oil as an inflation hedge, right? And then I update it with, for example, I'll get into macro land, but for the most part, I'm very much looking at sector rotation and when volatility occurs. So I'm very much growth to value, value to growth, rotation sectors, so we can basket trade. Okay, so this is the Fishing Club membership, and I've already mentioned Ed, Big Ideas is a splinter, which means it's only trend trading. It doesn't have any live trading room. It's all the algos, it's Slack, select Slack channels, but no live trading room. And a lot of channels aren't accessible for Big Idea clients, okay? And then the institutional Edge. And Discord is its own product. So if you're, yeah, so we have a, I can't even find it now. Here we go. No, that's not it. Okay, I have to go find that product because it's not coming up here. I gotta tell James that that's, here it is. All right, so if you went to that same page, basically under Leduc Trading, you will see the Discord server. Okay, and that is very much, very busy, but very active, tons and tons of education and momentum trading type of activities. So I hope this helped. I hope you got something out of this today, whether it be some really nice chases or a big picture at intermarket and trend trading as well. We didn't talk about macro at all. It just wasn't really the time. And if you have any questions, you can definitely hit up support@leductrading.com. I'll be here every day. That's what I do. And I hope that things calm down in the world, right? I really appreciate you spending some time. I really value your questions. I hope I added some value to them. I wish you a great trading day tomorrow. And then of course, whatever you do this weekend, remember we've got 2 more weeks before FOMC. 2 more weeks. Okay, so the question on trend criteria, that's for clients. So for example, I put in here under trend, there's a pinned tweet and it has all of my trend secret sauce methodology. Okay, so all of this is totally available for clients. Yeah, I'm not hiding anything. This is, everything is posted. Speaking of which, when this video is done, I will ask James to send it out. I don't know how he's going to do it, but he'll figure it out. Yes, volatility for me is a process. So VIX coming back down. Hold on. There we go. So VIX coming back down, just like you saw gold and oil and bonds, right? Those are all the safety outlets, the release valve. So they've come back down basically to support. Market was bullish as this fell, pretty typical, but big picture, it's still trending higher. So it's one of those deals where be careful, because we have not rejected this trend. The trend is still moving higher in volatility. But for right now, intraday, we already broke. That was a great go short VIX, go long the market, confirmation, done. I said we would come back to 31, then we need the base. It could take a few days. But on a weekly, it's still bullish. And I mentioned VXX, a really, really good one to watch is this inverse head and shoulders on a weekly. The fact that we're above the 10 and 21, the fact that 23, and I kind of put this here because above 23 is still market risk. We get below 23 on a close, market is safer again. Baseline. I got no trust for this though. So all I can see is that we got extended. Here's the 200-day. We came right back into support, which is the 3-day. Nice oversold short covering rally. We got nothing out of Biden in regards to news on sanctions that was really with any teeth. And the trend is still broken. All right. I hope it helps. Wasn't a presentation. It was completely ad-libbed. I hope it added value. I wish you a great evening on earnings and then tomorrow. And thank you again for your time. I appreciate it. And thank you, ladies, so much for staying late. Rithika, Archana, Tiffany. I don't know if Sudha's still here, and also Craig. He popped in, and I wish I could have given you access to Slack, but like I said, it's a programming event, and we did not have time to get that all together. Maybe another time. I've never actually done a public day before. I've always had discrete times, and then the rest of the time I'm publishing in Slack. So I hope it didn't bore you. All right. Wish you a great evening. Have a great weekend. Bye.